The ego on you.
Let's get nuts!
Good morning. Adjust to your speakers. July 21st. Gonna be streaming stocks, options, and futures today. Getting a late start here. It's 10:30. Sub up, like up, comment down. Happy money sticks around. Follow us on Twitter if you haven't already. It's at Happy Money YT. We have a Discord server link for those are in the description. I'll also put an invite link for Discord in chat, which I will pin. Right? Meow. Quite the morning. I'm gonna kind of be in and out some today, but wanted to get you guys know that I know I'm not muted. You know what I mean? And barbecue. I did sell out quite a bit, but not to say I won't buy back in. I just don't know enough at this point, and I can't really spend much time trying to figure it out right now. But good morning. Morning, Mo Lava. I think you are first one. Good morning, Cameron. I did not buy the dip. I just couldn't. I was available. Morning, Guts. Happy Friday to you guys. Make me happy. Thank you for dedication and money. Good to hear. Good to hear, Mo Lava. That makes me want to keep going, man. I really appreciate it. Morning, Maui. Kitty Daddy flexing his membership. Tay on the tip. Yeah, let's look at it. Aloha. Good morning. Mike wasn't muted. Mo Lava, thank you so much for the donation, man. Much appreciated. Very generous. Thank you all. Oh, thank you guys. Yes. Thanks again. All for your kind generosity. Good morning, Buzzin'. Morning, Desperate. Morning, Lords. Look at a moment. Let's look up. Big things happened today. Yeah, we saw the big thing. There it is. Good morning, MC. Good morning, Hugh. Good morning, Jack. Yeah. What a crazy dip. So, I mean, I just briefly heard the filing basically just sounded like liquidation. So of course there's still a chance. I guess just every docket, every filing we hear, they're not giving any insight that there is a chance. I guess as far as I can tell. Bullion says, my bet is still no cash for shareholders, but equity payment in a newly formed company still possible considering all the work with NOLs. Quotes, this plan is not an offer with respect to any securities. Yeah, I mean, you can kind of work your way around however you want it, and it can look good or not bad, but we're probably not going to have any insight until it's, it's done, basically, if they are working the angles, because they don't want any, they can't let anyone know, or they're going to want money. So, yeah. I guess we'll probably not know until you're not gonna know until it's too late, basically. If you're holding on through all this news, you're definitely gonna be you're not trading it. Yeah, you're just ride or die for sure. So I'm not a whole lot of today, like solid bounce like we've seen, tons of volume. It's working as a resistance up here now, which isn't great. See if we can get back into a bullish momentum. But yeah, the dip and rip was pretty nice. Yeah, if you could catch it this morning and were able to trade it, it's the 30%. Yeah, to the top of that wick, I bet it was 30%. So almost actually filled the upper end of the gap there, which is crazy. Broke back out of this range, which I guess is kind of bullish. We could hold support above this trend line. That would be good. Yeah, I'm curious. I guess I don't own any right now though. average down and probably done pretty well if I pay attention. Another filing macaron, and don't think it sounds very good. I guess, let's see. LBO confirmed, apparently. I think it's kind of speculation. I haven't heard anything concrete that it was their formal exit out of Chapter 11, as they put it, their pathway. I think maybe there is. You guys can correct me. I haven't looked at it. So, are we just speculating that this is the filing or the docket that is their so-called pathway out of Chapter 11? Or is it clear somehow? If it's not, then that's, more bullish. If it is, then yeah, you're just holding on to, I guess, hoping that it's a full buyout, which I think the LBO is what they're saying here, LBO confirmed, or a spin-off and shareholders get something else, or carve out, right? I don't think it would, with the verbiage on the filing, I don't think it, I think that's still a possibility. Spy TA. 1 in a million. Yep. Sounds like, let's see. Sit back and relax. The leverage buyout takeover is in progress. Fasten your seatbelts. Be a wild ride at the moon. Some explanation is needed, I suppose. The confirmation is shown by the dissolution of the BBY board of directors to be replaced by a plan administrator to have full power of authority. This is a hostile takeover from a leveraged buyout to prevent poison pills and/or shareholders vote manipulations by brokers, seed and co. to favor the short sellers. More details will come in supplement filings. Quite clear where the path is heading. Okay. There's no need to dissolve the board of directors to replace with a plan administrator in Chapter 7 liquidation. There's no need to dissolve the board of directors. I mean, that doesn't mean that they wouldn't do that. That's the thing where it's like, they don't need to do this, or this is, why are they doing that? Yes, you could ask questions, but I guess to just resort that means this is false. I don't like to look at it that way, but still a possibility, I suppose. I did get into IFBD yesterday, right? Yeah, it was on Pacer. People saw it. I mean, it was shared in our Discord. I know Cameron looked at it. Nighthawk, I think. Did you look at it? Alright, we can look at Spy. Okay, so the docket was basically, it's not really anything new. It's just further down this path of liquidation, more or less, right? So, everything that people are hyped about for a takeover merger, I don't think it's completely negated with this. I think that's all still a possibility, as far as my understanding. So basically all the hype that brought the stock up to where it was, 30 cents, whatever, is still there, potentially. Unless there's more to it that I don't know. This dip was, of course, just algos and whatever, and limit sells and whatever, shorting, I'm not sure. Here, Sears and Hertz have the exact same document. I'd rather not be in a Sears, though. But that is interesting. Extra 120 days? Do they extend stuff, or...? I didn't see it this morning when it opened, so I mean, you can see a huge gap down. That wasn't from retail. And then there probably was some panic selling. Probably some triggers, stop losses. I mean, that's way down there. $1,000 buy limit, 25 cents. Market orders, yeah. I don't think any retail can buy or sell pre-market. Or any extended hours. I'm fine to buy into a gap up 30% because of good news. Instead of buying a dip on a gap down because of, I think, bad news, but further down the road of Chapter 11 without shareholders having any value. Like, I might not have that opportunity. It might not be good news to gap up. Like, very well could be suspended and then, record date right then or something. I don't know how that would work, but you'd also have to be okay to miss it. And remember that there's other stocks in the stock market you can make money on. GFAI up 44%, speaking of, after it went up 100% yesterday. Whew. Morning, Tasty. If you had limit buys and sellers had market orders, you caused this. No, it's good. You guys got filled. Lower prices. Yeah, I don't have a whole lot of conviction, I guess. And I'm not wealthy enough to have a big enough position that would be like just a gamble for it to even be worth it, seems like. I don't know. I'll just keep trading it, whatever. Dips keep getting bought up, so that's good. Good for the stock. That's how you get your fill. Let's see, next down 1.5. SPY gapped up and dropped now. Next down 1.5. It's not looking great. 125 might be the bounce on neg. Oh shoot, my Zim call. Yeah, that's probably fine. I had good till cancel the orders that filled this morning. Oh, I got a Zim call. Picked up Exim August 17.5 calls. Nighthawk, are you in here? Another dip? I mean, probably a VWAP test, I would imagine. I mean, it's basically a bull flag, which is good, but you're under a resistance, so. But yeah, the fact that it even is above this trend line. I guess if it hit VWAP, it'd be below it, but yeah, I think you'll get a dip to VWAP if you're trying to pick up more. You know, it's Friday, it's down 10%. Like, if you didn't look at the pre-market, it's really not that bad. This is kind of somewhat what we were expecting, I guess. Breaking this was a good sign, but without breaking this kind of trend, the handle wasn't formed. So you could still look at this as a handle, I think. But I mean, you just can't count all that down there. I don't know. Let's see. Yeah, because that retraced all the way down to like 24 cents. I would still consider this a handle. Big wicks mean nothing. So 50% retracement's 33.35. You're going from where I have that bottom line on. I don't think past that is actually, after 50%, I don't think you consider it a handle anymore. So then you just have to accept that we're maybe trading in this range for now. We might see some lows again, 27 cents. Should made this article. 20% return all their advice. I didn't even see any Seeking Alpha article. Yeah, there's no gaps to the downside and the upside. I mean, maybe it got real close to filling 36.20. Maybe that's close enough for OTC. I don't know. Within the margin. I'm only gonna buy more. Only gonna buy more GME calls. Trying to buy 150k now? I thought 100k. So cheap, you can get 150. VWAP's at 30.06 right now. If we break this low right here, we're probably gonna see VWAP. The bottom of this bull flag. White House will intervene? Oh, what do you know? Well, SPY hit 450? Oh no, we're expecting... I talked about it in yesterday's video. We still have, yeah, I guess we still have the rest of this the rest of this cup. Potentially to get filled. But on a longer time frame, we could just be pulling back before continue up in this channel. What are these levels I have on here? Yes. Oh, that's the cup. Okay. If we do come all the way down, I think we could. I think 450 is on the menu for today. Let's see, you've got a head and shoulders here. Yeah, look at this head and shoulders today. A 5-minute. Interesting. But you have a larger inverse head and shoulders right here. Still in this downtrend though. and a selling channel. I think finish out this cup. Guess we'll just have to see if it breaks certain levels. Yeah, see, barbecue just broke that bull flag a little bit. Yeah, so it's probably gonna come down. Seeking article out. Article was censored. What? $32.25 and barbecue down 12. IFPD. BD could be set up a head and shoulders here too. I'm gonna close these shares. Might jump back in at some point. Okay, not IFPD for now. Eventually's down 2%. What's your low thought? Like below for a dip buy? Yeah, it's down a little bit. It's a good idea to scale in, especially if you're looking at larger positions. So I would recommend. Just as a strategy. In general, I would probably look at getting some at VWAP. Well, that 30 cents, just over 30 cents, 30.12. And just being patient, seeing where it goes. I'm at the bid and it won't sell. Weird. You trade jacking up again? They go below the bid. Just really a liquid, maybe. I don't know. Yeah, that's bad. DWAC's up 63%. Turns down a little bit more. Go. Buy bounce in there. 29 cents. If you up right at like 30. So you could pick up some there if you wanted. If that doesn't hold, I'd probably wait for like 27 cents maybe. I mean, the momentum's down, so we're just kind of dip buying, hoping it turns around at some point. Jay's souls. Buys going up a little bit there. Vivek, I think it's gonna probably cruise back down to VWAP and I don't know, probably go up and down and probably close around VWAP today. I don't know. I mean, you have your range 24 cents up to what, 36? So, pick a spot in the middle. I don't think it'll necessarily break out to the high or the low today. VWAP's right in the middle. XXII up 10%. 47 bull flag, 15 minutes. Yeah, it's still kind of in a bull flag, that's true. Slow meltdown's not bad. You call me Mr. Money. Let's see, where's this SPY even? IFBD still holding up good. DWAC's up 63%. GME's getting close to deciding here. Lift is down 1.3. Baldock really sold off from that. Runs down 1.6. GFAI 44% still. Executing? 55 net call weeklies? Dailies, I guess? Oh, look at that. Next up 1.8%. We got an invert head and shoulders here too on the SPY. Interesting. Bullions on Discord? No, he's not a shill. Little green candle there on barbecue, so it might hold bull flag for a while. I think a VWAP's still probably in its future today. Oh, you mean exercising or neg calls? Lose these shares. You have short calls? Oh, you have short calls that are in the money? D5 1.5s? I thought you were buying calls. You were selling calls on neg? Or you're long on those calls? Why would you exercise calls? It's below $1.50. No reason to exercise those calls. You don't want to lose your calls? Well, you agreed to lose them today when you purchased them. Barbecue holding the flag. No, you've lost the 500 when you purchased the contract. You've paid that money. Gone. If you want to invest 7,500, buy 7,500 worth of shares because it's cheaper. Even if it was at $1.50, it's still not worth it to exercise. You have to pay exercise fees. Very choppy SPY this morning. Barbecue, little move up. A lot of volume today, of course. Only down 9%. 33.38. You threw an ask order? Lost sleep last night? Morning, senior. Oh, because you read that docket before you went to bed? Not good. Hey, you got your bounce. Ah, IFBD. Oh, it's just a VWAP, I guess. XXII, 20% now. It's nice. Thanks, Southern. See if BBIG can stay awake. Let's rally up. Etsy's up 6%. I'm moving up here a little bit. I suppose a break of the high would be a good long. You've got both inverse and normal head and shoulders there. There's, oh, I guess that's not a high of the day. We opened up here. Broke that high though. Oh, weird. E-Trade is really slow. Market orders that are pending. What in the world? My browser? See if Blink finds a shoulder here. It's inverse head and shoulders. Someone owe you an apology, Jerry? Ah, BBIG is now green. Do it. Nice little pop there on BBIG. 1.8. Dish is at 5.3. Looky, looky, looky. GME's down 1. Barbecue's down 11.5. Up huge on EPS. On both legs? You still have both legs though, right? Oil hardly affects the puts, but fast increase the calls. How do you do it? I don't even understand how you get to that state. Is it, are you just getting like pre-earnings run up so the IV on both are going up? These up 6.5. 32.49 on barbecue. Tops up 2. Fingers down 12. Yep. Workhorse. I want to go long on workhorse. Was it workhorse? Yeah. Sorry guys, pretty tied up over here. Barbecue looks like it's just barbecoating right there, so that's pretty bullish. It's in a bull flag. Hasn't even made it to VWAP yet. Kind of interesting. SPY is just choppy. There's a rebalancing today, so end of day might actually get kind of crazy. Get really crazy. Sorry, yeah, it stopped. I'm trying to read, yeah, anything specific in here? Short, everything Kathy. I'll throw Jenny on it. Is Neg cruising? Yeah, 3.3, nice. What else was moving? Oh, BBIG was rallying also. Yeah, there you go. Breakout right there. Caught it. 4%. Nice. How's Zips picks working? It came down. He's fine, Lord. Leave him alone. Rebalance. So the ETFs rebalance. So a lot of selling and buying of assets to rebalance the ETFs. Sometimes you get a lot of volatility. I think that's when we saw that one GME rally, like end of day, when it was being added to S&P 200, or I don't know, one of those. It was like in the last 10 minutes, just had a straight green candle. It was crazy. You're buying dailies on an egg. Yeah, maybe there's some daily calls we can YOLO. How's Tesla looking? I don't know. Market's just chopping. Might just end up being a chop day. Chop fest. No direction. Wait for next week. A lot of data next week. Services PMI on Monday at 9:45 a.m. and manufacturing PMI. Tuesday is the Case-Shiller Home Price Index and the Consumer Confidence. Wednesday is FOMC and then Powell. So, pretty good data next week.
Down the page and look at today's option. And if you look on today's option statistics, look at the percentage of trades that trade between the market, not on the bid ask, but on the in between the bid ask. Almost 70%, 2/3 to 70% of the option contracts that trade.
Barbecue could honestly rip in a day too, the way it's holding up.
That gives you a head
Or, I don't know, rip, but maybe back up to fill that gap.
Slightly above, slightly below. That tells you that there are trading contracts and they are trading in between the bid ask. So make sure this is a great lesson for working your orders and understanding price discovery.
Got two Zoom calls? What the heck?
Remember, liquidity, the price you get into a trade, and that slippage when you get out of a trade, that goes right onto your bottom line in terms of profitability or loss, your ability to get in and out of a trade. So make sure you understand. You can see it on the option stats page, one of my favorite pages on the Thinkorswim platform. It'll give you all the information you need right there to see if a name is liquid between the bid ask. All right, guys, we're going to wrap up our second segment, actually. I want to thank Alex Coffey for stopping by, spending some time with us. Remember, he's the host of Next Gen Investing along with Jenny Horn. He's coming up next on the Thinkorswim platform. Now let's take our second break of the show. Come back with Landon Swan from Likefolio that's going to talk about restaurants in general, and our featured name of the day, that is Domino's Pizza. Take another quick break.
A little different show today.
2 minutes with more
Yeah, he's a spades. You think get happy. Yeah, I mean it's bull flagging. Didn't even make it to VWAP, which is kind of interesting. So yeah, seems like a pretty good setup. I guess TA wise, I'd like to see it. So some kind of reversal. You know, maybe breaking above here, making a little inverse head and shoulders, picking it back up around 35 cents. But I don't know. I don't even know if I should be trading anymore, unless I'm just gonna hold it. With the volatility that it gets when a docket drops. And I'm not just dip buying. So maybe just holding the cash, and then when it gets to chapter 7 news and it dips 50-80%, just buy it then for that 80% rally. Like maybe that's just the way to play it. Couldn't take your shares that time? You held on? BBBYQ. Nice and steady. Should throw more into this one. Yeah, that's only 12.30. Jeez, all these calls just got links down 2% today. Lifts down 1.8. Eggs up 3. That's not bad. Considering jumping out of these calls though on neg. Really need that risk on to turn back on to get the rally going. Maybe next week. J-Pal could ignite it again. I do some
the box is fading just a little bit, but the rest of them are right on that zero line on the change in consumer demand. Even though they have happy customers, you know, they're the third out of all of these, so that's obviously a positive thing. But
Zim has earnings on the
it just makes me a little
14th.
bit concerned. And then when we combine that with the web visits, so if you look at Domino's.com, how many people are going to that website? We actually see that as a 12% decrease on a year-over-year basis. So it's getting less traffic. And you know, I think it makes sense for them to do something with Uber here. I think that's Uber Eats. I think that's a great idea, and it could turn things around. I mean, when we look at Uber data, Uber itself is plus 26% on year over year, but Uber Eats is plus 12%. So both of those, the Uber brands, are bringing more business to their customers. So this is probably a good move by Domino's. And you know, they gapped up tremendously. What was like a 30 or 35 point gap up on that news release? They went from 30 or 350 to, I don't know, 390, somewhere in there. And now we're bumping up against that November, December high of about 395. We're not quite there. We're about 385 or so right now. But you know, it's hitting that sort of that resistance level. So with earnings coming up on Monday morning, again, should not be allowed, but they're doing it. If we were trading at 395 or 399,
I mean, should not
I'd
be allowed.
pretty confident on a bearish bet. Since we're a little bit lower than that, there is some room. I don't think it's going to gap up over 400. You know, we're a little bit bearish, not tremendously bearish. We're about a negative 13, which is kind of neutral.
These Blue Productions, Bolty Productions.
If it happened to run up over the next couple of hours, that would kind of give me the green light to go a little bit more bearish. But that's kind of where we're at right now. You know, if you look at the expectations, revenue is expected to increase about 5%. Cost of goods, cost of sales.
What I put on for you?
1%. So there's some good expectations out there, and I think the stock is showing us that. But everything that we see as
little Trader TV.
Is
Stop looking at me, Schwan.
And so not leaning hard bearish, but if we happen to get a run up in the next few hours up into the 390, you know, low 390s or so, I would be a little bit more confident in taking a bearish bet over the weekend.
Landon, it's like you and I are sharing the same brain and trade on this one, because that's kind of how the way I have it set up for the trade with our call diagonal. But let me ask you a question real quick. It's almost as if the Domino's CEO maybe saw your report in advance of this, because I mean, that Uber Eats deal, what does it do, right? It invigorates a younger, newer mix into their customer base. Not only does it, provide that optionality, but here's what I think is important about it. When you're talking about that younger base, one of the things that they really care about are those app loyalty programs and those app loyalty points, right? So if you're using Uber Eats, you want to maintain Uber Eats. If you're using DoorDash, you want to maintain DoorDash. Now, the deal with Uber Eats only goes through 2024, right? Then that opens it up through, for potential other third-party apps like DoorDash. But is this something that you think is a move in the right direction to maybe reinvigorate that younger crowd to Domino's Pizza?
Yeah, absolutely. This is a company that has really turned itself around over the last 10 to 15 years. I mean, they were a bit of a joke when it came to pizza that long ago, but now they've totally reinvented themselves. They've got, I think one of the best tasting pizzas out there. But one of the things that we saw with COVID was
overly censor me.
Services started to take off, and it used to be.
What are you doing then?
He's
He's censoring.
Delivered, it was pizza, right? That's it. That's the only way you could get food delivered. But now with all these food delivery services, you could get anything you wanted. And with the trend that we've seen from that kind of came out of that was pizza delivery overall has been in a decline ever since COVID, because there's so much competition on your phone now for whatever you're interested in. So I think this is actually a brilliant move by them. I think it's definitely going to lead them in the right direction. They've got to be on there with their competition, and as opposed to, should I call for pizza, or will I open up my app and look at 50 different restaurants that could be on there? They've got to be one of those 50. So this is a smart move. I think they had to do it.
What company are they talking about?
Again, the data is just not. It's not.
Well, they're talking about Domino's
yet. I think if there's going to be any kind of positive reaction to this, it's going to be in anticipation of what could be. And I think that's already happened with that gap up. So I don't know what else is going to come out of this earnings report that's going to send the stock, crashing up. I mean, soaring up over 400. I just don't see it.
Well, here's what it is, Landon. I'll give you a theory that I have on this. I think what Domino's Pizza is going to say is this is $1 billion opportunity going forward for us to grow. It may not be the earnings that they get on this number, but their guidance for the future and what this deal with
chilling right above 4.
Postmates does for their growth going forward.
Nicola's up 1.5.
We've seen a lot of this with CEOs over the last year or so during the pandemic. Mark Zuckerberg, right? He refused to adjust, and look what happened to Facebook stock. This is a CEO that was, frankly, horse and buggy thinking, right? Thinking only his cars can deliver his food. Well, now they've learned through slower sales and sluggish earnings that they got to embrace the new technology and get to a bigger sample size of people. And so I think this could change the projection. Remember, their all-time high is $567. So with the right message going forward, Landon, and I want to get your thoughts on this, this could be a start to a new projection in terms of them, because they have now a better story going forward, Landon.
I hear you. I'm thinking, okay, it's been announced. There was a huge gap up, right? I mean, 10% plus gap up on the announcement.
Big.
And there's a lot of optimism in that, just in that move in itself. And so to get on there as a CEO and say, yeah, you guys were optimistic, but you weren't optimistic enough. This is going to be gangbusters. This is going to be so amazing. I mean, you have to be able to back that up over the next quarter with sales. So I think, I don't know. I'm not sure the temperament of the CEO. I mean, is this, if it was Elon Musk as the CEO of Domino's, I'd be like, yeah, he's going to get up there and talk about how amazing this is going to be, and his stock's going to go up over 400. But I just think that it's already kind of priced in. And if you look back at some of the last earnings moves, it's generally speaking,
Ace is a gentleman.
$30 on an earnings
Agreed.
move, and that's what we got out of this announcement. So I think a lot of it's priced in. But that being said, if it did happen to break 400, it could absolutely run. I think the odds are it's not going to break 400, and it's going to, have some resistance up there. So if I was setting up a trade, I'd be selling something, or I'd be selling 400 calls or something like that. But yeah, I don't know, Kevin. I mean, I get it. I can see why this is a huge opportunity for the company, but but I feel like the investors out there have already voted with their dollars, saying yes, we already think it's a huge investment. If they come out and sing and dance that over all over again, it's like, you know, we've already figured this out. So I don't know. I'm gonna be listening on the call. I want to see what they do, and we'll see how our investors react. But my gut says it's priced in.
Landon Swan, thanks for coming on. I'll tell you what, if they send a corporate jet to fly me to Ann Arbor, Michigan to their headquarters,
Thanks, Lords.
I'll give the presentation, and I'll bet you.
What a gentleman you are yourself.
Landon, thanks for coming on as always. Have a great weekend. Have a great weekend, Landon. Joe Mazzola, you got a trade for us in Domino's Pizza. You've got a call diagonal. Tell us about it.
I do. It's you know, just like
I'm gonna need that 24 pack because I might not be on board.
I have to have a mea culpa moment next week after this trade. So here's what we're looking at. Really
What a barcode.
What Landon was talking about. It's the idea of almost like a poor man's covered call, right? I want to buy August 380 calls.
Came back online on iBorrow for barbecue.
And I want to sell the July 28th.
500,000,
So
378%.
Take into consideration
Wow.
earnings on Monday, the 400 calls. And basically what this
Way up
trade
here.
is hoping for is for a slight move back up, maybe up to that 400 level, but not getting up above that 400 level. And almost looking at it as, like I said, a covered call without having to own the shares, without having
That was
to
a
buy
1230.
shares and fork out
$178%.
$38,000 if you were to own 100 shares. So basically, if you can do this trade somewhere around 1270, I think it's now it's even come down a bit, so 1235. Your debit outlay is $1,235. That's what you really have at risk, and that's at risk through the duration of those August 380 calls. So the break even on that, it's going to take you up just shy of 380. So basically, gives you a little cushion from where we're at right now. But what I like about it is if you have a
You bought some dip, Daniel?
now longer term, look,
Jeez, man.
If this wasn't a show where, you know, we do trades for the next couple of weeks or so, and we were able to kind of look at this longer term, I'd probably extend the duration.
I wasn't being sarcastic.
Because this gives
Spy's
us
coming
time
down there a
to
bit.
figure out whether that strategy is actually working out for the company, which means the strategy, you know, potentially working out for this trade.
Finally, this Head and Shoulders is playing out.
A couple rolls in there. So you'll have that
Building an inverse cup.
You'll have the weekly calls after that if you wanted to roll those again and reduce that cost. But it really takes
A little high there on barbecue, 33.75.
out of that debit for those long August calls.
Might be breaking out of this barcode. Got some volume there too.
Should you get a move that takes you up towards around that $400 level, if those July 28th expire worthless, like I said, you can roll those, or you can roll those anytime in advance. Do be aware that if this thing rips up to the upside, you know, those are potential assignment risks, those 400 calls.
Right.
But I think the real one is, you know, should the earnings report come out poor and then you start to fill that gap to the downside after, you know, that move that Landon had called out before that came out after the Uber Eats announcement. You know, there's a big gap.
You get a bounce here. I could go long here or wait for the bounce and go short on the handle.
It reduces risk.
Always buys back in. I don't know, Lords.
Outlay like you would by owning 100 shares, you have about a $1,230 outlay. That's the big difference.
Not breakout, but
yeah, here's the driving point of Joe's
just
presentation.
leaving the barcode maybe on barbecue.
On this trade,
I'm thinking I like the strategy of just having some cash for it. And we get those huge
because it's a 3-week spread
sell-offs from
August
the awful news.
To July 28th.
Just buying that dip.
A 3-week spread that will allow
Not trying to play the TA because the TA only works until you get a news drop, and then
your max risk
messes everything up.
$86 stock is only $1,240. It's not inexpensive, but remember, you are trading a $20 diagonal as well. So it's in the calendar spread family. It's long about 21 Vega, but you are also collecting theta, theoretically about $47 a day. So long deltas, collecting theta, long some Vega, and gives you some duration for this to play out over a long period of time. All right, great idea right there, Joe, for a bullish
BBBYQ just
that basically
sticking it to that climb.
Makes it so you don't have to buy the underlying to get bullish. All right, let's take our final break of the show. Come back with Ben Lichtenstein, a market update.
Lichtenstein.
A look at the gold standard in fast food, that is McDonald's. Take a quick 2-minute break. Come back with more Fast Market. See you.
I like how it sounds like I'm starting a record. I think that's what this plugin, this volume booster plugin, it's like, brrrt. You can like hear the feedback of the vinyl. By just inching down here. Alright, looks like barbecue's on the trend up. A bit. Buying power in it. Yeah, I'm just considering buying in a different way. Just dip buying like a retard. There you go. Little pop, 3380. Down 7.8 per shell. Don't even know anymore. Redfin's down 5. An RSI divergence there. Head and shoulders. From SPY, but it's still holding that trend. Used a bounce there. Ah yes, big lots. High gamma squeeze potential I hope so. I like that you're pumping it too, just raw data. You carry on with your pumping. Fubo's down 4. Barbecue's still climbing? Yeah. Yeah, I bet you'll see high of the day. Maybe. Yeah, neg's up 4%. $0.40 today. Wouldn't be that surprising. Liechtenstein.
What are you seeing in crude oil here? All some movement sitting almost unchanged right now.
Yeah, well, you know, we talked about Tesla and the Netflix results being a little bit of a headwind for the tech-heavy NASDAQ yesterday. I think crude inching its way back up to 77 here is going to be a little bit of a headwind for stocks if that continues. There's been a lot of bullish factors, Kevin, in terms of the run-up we've seen and the support that we found at those lower levels around 67. Now as we work our way through the middle of this range we've been in since October of last year, it lends itself to a retest of the 82, the upper extreme of the range. And I mentioned some of the bullish factors. You have a dollar which has weakened significantly this week to 15-month lows. You've got cuts. You've got China stimulus expected. I'm not sure exactly when it's going to happen, but it's going to at some point, it seems. And in addition to some of the other factors we've been kind of watching, just lots to keep an eye on, because crude to the upside opens up a door for that inflation discussion again. And lastly, I want to point to rates, which are also kind of working their way towards the upper extreme of a range we've been in since last fall. Also, Kevin, lots to keep an eye on next week with these markets kind of on edge, and all of these feeding right into that inflation discussion, which ties into headwinds, more headwinds for stocks.
Going to be an interesting close to the day and a massive trading week coming up next week. Ben Lichtenstein, he's the host of Futures with Ben Lichtenstein every morning on the TD Ameritrade Network. You should check him out. Have a great day, Ben. Thanks for coming on. Now, I'd like to bring in live from Salt Lake City, Utah, Mr. George Tillis, to talk about our third name of the day, George, and that is the gold standard in terms of fast food, McDonald's, George. It's the biggest. It's the definition of scale. What do you got for us at McDonald's, George?
Well, I mean, I think you're onto something there, Kevin. If you think about the McDonald's, it is a gold standard. I mean, what's not to like about the brand, and of course the global reach that this company has. One of the things about it, if you look at it, it's up nicely this year, about 12.5% on a year-to-date basis. Pays about a 2.5% dividend yield, and effectively they've been growing pretty phenomenally, not just in sales, but their operating margins have been significantly improving over the last year for the same quarter as they reported Q1 earnings last time around, up 200 basis points in operating margins, while gross margins have also improved. So this is a company that is not necessarily growing the number of stores, or if you will, units, over the past 6 years or so. Since 2017, they've only increased the total store footprint by 8%, but their earnings have been increasing much more than that. I think that speaks to the solid trend that the stock has been higher in the last 5 years or so. You got to keep in mind, one, this is a Dow component. We know that the Dow stocks have been in favor. You have to kind of look at this as both a hybrid, a consumer staple, but also discretionary. But financials will make a difference, and you got to keep that in mind as well. They are expected to report earnings on the 27th, so in about 6 days or so, the earnings per share are expected to be higher by about 7%. On a year-over-year basis at $2.72 compared to $2.52 for the same quarter last year. Well, at the same time, sales for this particular quarter are expected to be higher by 8.5%. That's again about double where they were last quarter.
Yeah, I don't know.
At around
I don't know, Sony.
billion versus the 5.72
I sold
last
today.
year. I think a couple things
But,
to note for McDonald's will be, what is the
I think
same-store sales
technically
growth,
nothing
both
changed as
domestically
far
and
as
internationally from a global standpoint.
possibility of a
Last quarter,
buyout
it was pretty
or
high at
carve out.
12.5%.
So it's just
But you also have to keep in mind the company's still
another
aggressively
chapter
growing its,
turned in the
net
chapter
new store
11
footprint. It's
book
closing some
that we're reading.
less unprofitable stores.
More
It's
liquidation.
new stores, but the total store count is expected to grow about 1,500 units. By the
It doesn't
end of
look
the
good,
year.
but
900 of
you
those
know,
units are expected
nothing's
to be in
looked
China
good.
alone.
The stuff that's looked good was because it
My
was
question would be,
confusing and
after the
unknown
last earnings release, the stock is
and
really just kind of
speculated
sitting,
on.
between 280 to 300
RC
for
being
quite some
one of
time
the
now.
interested
I'm
parties. Yeah, that
wondering,
looked,
you know, is it
I guess,
new
better than not
product
good,
release?
but
You know, they've got the
there's
Grimace
nothing
shake,
concrete or
maybe the social
specific.
media marketing campaigns
Could have been
that they
other
were
reasons why he was on
undertaking.
there.
What is that catalyst besides
But,
maybe just that,
yeah.
the revenue and the earnings growth at the same store sale level? What is that new catalyst that's going to push it up above those $300 levels?
BBIG's up
outside of
6%.
products that they're launching, which we know that they're trying new products all the time, and of course discontinuing products that don't seem to pan out. I think it comes down to
XXII up
measures and
38%.
operating leverage. I think that's really the story behind McDonald's, and I think that's one of the reasons why the stock has performed quite well.
Get that
Especially
neck
if you
dip
look
up.
at it over the last 3 to 5 years. In particular, you'll see that it did move higher.
At 4.5, not bad.
Going back a few months or so. It's been stalling out a little bit, but one of the
Thought
things
about selling some calls in this thing.
as well, it's still trending above its 10 and
Look at that
respective
IV.
20-week moving averages, and that signifies that it's still in a bullish uptrend. And I think valuation as well.
I'll probably start
Considering
selling
on a
some calls
forward
on it if we
basis,
get a pretty
they
good
are
rally.
expecting EBITDA to be about 7.5%. The stock is trading around 27 times earnings, which is actually
But it's not
less
looking too
than
good, really.
It's one-time
this
net
is
income margin. Its net income is
not a
around
great
29%.
setup anymore.
So one would say perhaps that it has about 2 basis points of multiple expansion on a forward basis still going for it, and that means that it could
Hopefully
could
keep the
increase
trend
again
up.
between 5 and 10%.
George Tillis, thanks for coming on as always, giving us your thoughts and your knowledge on McDonald's. We'll take it from here. Have a great weekend, George.
Take it from here.
Thanks, guys.
All right, now we're looking at a trade. Remember, they come out with earnings next Thursday morning, the 27th of July. So what we wanted to do is trade something out into next week. So what I did, looked at the expected move, looked at the level of implied volatility, looked at the run that this stock has had, and what I'm going to do here, what we looked at for a paper money trade, is the short 290 to 85 put vertical in the 28th of July expiration. Currently trading 91 cents. Joe, we're running a little late on time. Give us a quick look at a short put vertical in the earnings event week.
Yeah, so sure, real quick.
Yeah,
50-day
I mean, the
moving
volume's
average
decreased
right
ever since that rally,
So you got a little bit
which
of
I guess
a
is
little bit
bullish.
of a push in there. Here's the
Coming
thing
down
with
on
this
decreased
stock.
volume.
I think, George said it very eloquently. It's all about
40%
the
on
margin
XXII
expansion.
now.
Continue to show that they're cutting costs. Continue with the margin expansion. And
VWAP
just the chart itself, it's a
45%.
good looking chart. I mean, this
Back
thing
up to
showed
VWAP.
steady growth. Technically, really, basically since the last earnings event where it got up around 300,
barbecue.
it's kind of vacillated around that 290 to 300
Whole
level.
shutdown.
I think if you see that improvement, that this has the opportunity to continue to go up. And if that's the case, the put spread would work out all right.
Yeah, great job as always. Joe Mazzola, thanks for coming on. For all of us here at the TD Ameritrade Network, have a great day and a great afternoon. By the way, one last thing, rest in peace, Anthony Dominic Benedetto, also known as Tony Bennett. We'll miss you, buddy. Have a great weekend and a great day, everyone. Next Gen Investing is coming up next with Alex Coffey and Jenny Horn. From all of us here at the TD Ameritrade Network, have a great day and a great weekend.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep
Alright, barbecue. You're still holding on to a nice flag. Jedi.
On the other side, you get a move. So sort of what we're seeing, I don't put a lot of credit or credence into anything that we're seeing today. If we finish down 50 in the NASDAQ or we finish up 50 in the NASDAQ, that quickly can be undone the second a name like Microsoft or Alphabet next week gives us some info. We got Fed next week, we get data next week. This is the calm before the storm.
I was going to say we have such a busy week next week that it almost feels nice right now to see things relatively quiet. But as always on our show, we'll kick things off with our upvote and downvote segment. Then we'll chart and trade those upvotes. Our phone discussion today is a really interesting name we don't discuss very often. That is Live Nation, seeing a lift today. Also seeing a really nice week after analysts get more optimistic on this name. Then we'll look at Chipotle continuing to see really, nice price activity. That company has earnings next week as well. Last but not least, we will look at XPeng. Also some analyst news on that name, another name that's on the move today.
Yeah, tons to get through. Exciting show. I'm excited to talk some Live Nation. We haven't spent a ton of time throughout the years talking about that name, but certainly some big tours and stuff have taken place, and it does feel like COVID is in sort of the rear view mirror at this point, Jenny. So a little bit of excitement there to talk about. Obviously, making a nice move here today, given the fact that nothing's really moving. Just the fact that it's even higher is pretty impressive. But excited to talk Chipotle as well. So we'll get through everything. But let's do upvote, downvote, not endorsements, not recommendations. We got some big movers in this group, especially this first one. Down 10.5%, but was this the story all day? Because I see a lot of big candles and movement here. This thing seems like it's been all over the place.
Yeah, this is not the first time I've discussed this name, that being SiriusXM. This name has been the candidate of some short selling, which is why we've seen shares, like you said, Alex, all over the place. They're now up. They had a 115% rally over the last month. This is said to be fueled by some low liquidity and many of these most shorted names on the street, and then further fueled this week by the Nasdaq's reweighting and that Sirius then being affected by that. Now, Pivotal Research did say Sirius shares are now trading at about 15 times their entire entity to show this 9% decline in EBITDA in 2023 and low single-digit EBITDA growth thereafter, which they said is frankly making it very difficult to fundamentally justify its valuation levels at these current levels. SiriusXM, though, this name has traded literally all over the place. Alex is trading right now just below $7 a share. These analysts have 450, and 625 price targets. Deutsche Bank also double downgrading shares to sell from buy with an unchanged price target. Evercore ISI downgrading this name to underperform with a price target of 450. So the analysts do see all three of these see some downside from here. It's always interesting to me to say valuation is all relative, that these analysts think its valuation needs to come down, and this is a $7 stock.
Yeah, stock, of course, the price is only as important as the number of outstanding shares. So, you see Chipotle trading for $2,000, for example, a name we'll talk about later, but it's not bigger than Apple, which trades for a much smaller share price because there's a lot more Apple shares, and so the same applies here. But you look at this company at almost $27 billion. It really does seem like a stock of yesteryear. So surprised to see that it's that big of a valuation still here. But obviously a little bit of pessimism here from the analysts. Obviously some movement to the upside recently in the stock, kind of on that short squeeze territory. So we'll see what happens. It's not the only name that we've seen make massive moves as of late. Next one on the list is McDonald's. This has been a slow but steady name, it seems like, throughout the last 2 or 3 years. A lot of volatility elsewhere in the market. and McDonald's has been sort of that steady hand throughout it all.
What's really interesting about McDonald's when comparing it to other restaurant names is this is almost like a real estate play because they have such a wide portfolio of leased and then franchised real estate. That is something to almost bring into the conversation as equally as important as its food. And Alex, I have to get your thoughts on this name because Ben Lichtenstein was just debating me in the newsroom about the quality of McDonald's, and I am so pro McDonald's. I always say it has like one of the best aromas of all time, but Ben not feeling so optimistic on McDonald's. They do have their second quarter earnings next Thursday before the market opens, but KeyBank today raising its price target to $330 a share from $320 with an overweight rating. They said they're poised to report another quarter of industry-leading same-store sales growth fueled by operational excellence as well as strategic price increases, cut-through marketing programs, and this is just based on some of their conversations really across the industry. This name is sort of right around its 52-week highs, also all-time highs, I believe, in McDonald's. Hasn't seen the same degree of outperformance as, say, a Chipotle, but a relatively more stable name. It's up about 12.5% this year.
Yeah, this is not a name that I think gets mistaken for Chipotle. I don't think you buy McDonald's for the same reasons you'd invest in Chipotle. The same reasons that you wouldn't necessarily, buy any consumer staple type name in place of more of a growth-centric stock. So this is much more of a value type of a stock, but it's been very, very resilient. It's survived 2022 brilliantly. It's been really nice in 2023. And of course, it had a nice run post-pandemic as well. In reference to my feelings about McDonald's, which don't let them influence you. If you got have your own feelings, right? I like McDonald's breakfast. Everything else is solid if you got to go somewhere quick, but I don't think I'm choosing it over a lot of places. Chipotle maybe being one of them.
See, McDonald's fries to me are unmatched, but people that act like they're too good for McDonald's, and I will be the advocate for McDonald's. Their fries are unbelievable as well as their Diet Cokes. But our next name today is ServiceNow. Now this name is also up still 0.9% now on this session. This name
disgusting.
is also an outperformer on the year. It's up 50% since the start of 2023. And we did see Baird today raise its price target to $640 from $560, keeping an outperform rating. The firm does expect some solid results given the end market resiliency and durable growth trends they're seeing.
A nice entry down here on that inverted head and shoulders. I just wanted the full inverted cup to finish.
With pricing expected to be a net tailwind to growth, and they do expect some additional
quite a
pricing
choppy day
disclosures over time. KeyBank today also
What's
raising
your
its price
question,
target to
Lords?
$675 a share from $547 with
What do you want me to say?
rating,
Yes?
saying that based on some of its survey data and conversations with its channel
Just
partners,
ask it.
they
You don't
do
have to ask
expect
if you can ask a
their
question.
results to improve modestly versus last quarter, and they do expect now a more optimistic outlook for the remainder of this fiscal year. So ServiceNow has earnings next Wednesday after the market closes, a name that is up about 0.5% this week, so it hasn't necessarily been super strong, but is only down about 5%, or excuse me, it's up 73%.
7.5 on BBIG.
High by about 5%.
Doing it.
Yeah, this is a fun one. Probably not a name that gets as much love or attention as
Up
the
to
names like
$8.
Microsoft or Alphabet in
Nice
the
and
AI
easy.
space, or even a name like Palantir, really. But it's kind of quietly one of these names that sort of operates in
Picking
this
up all my
space.
barbecue
Doesn't
losses.
necessarily get the credit for it outside of those who are maybe really in the know. Cloud computing company, workflow automation, artificial intelligence, machine learning, robotic process automation. I mean, this is exactly the type of name that the street has loved this year, and so I'm not surprised at all to see the optimism from analysts, but also a really, really impressive chart. I know it's making back a lot of the weakness that it had last year, but all things considered, it's been a pretty nice run so far this year in now.
Talk about a name with a nice run, too. Our last name is Rivian. Rivian shares are up over 51% just this month. Now, we have seen some of this momentum slow from really last week. We're only up about 1% week to date, and clearly down about 2.6% today, but still a name that has propelled so much higher just over the course of July that now it's up 36% year to date. This name was doing nothing on a year to date basis until the last 2 weeks. It's really phenomenal to see they actually were tracking to then open around the 7-month high.
Just rallying there.
We did see them peak this morning at around $25.91 a share, then pull back about 7.5% amid a 3-day losing streak. And then we're seeing today the continued losses building. Now, among the other EV makers, we have seen some strength in names like Tesla. Tesla's still up about 0.6% now on the session. We did see that name tumble about 9 and almost 10% on Thursday on the back of some second quarter results, and then corrected about 10.4% since closing at its 10-month high. So we did see some shakiness in the EV names yesterday, and we were talking about Tesla on the show.
Oh yeah,
Alex.
Tesla.
I thought that the reaction was a little bit too pessimistic, but nonetheless, seeing some degree of things sort of cool off.
Might sell some more Tesla.
EV space outside of NIO, which is up like 2.5%.
No, I'm going to balance you out. I'm going to say the run-up was a little bit too optimistic prior to earnings in some of these names. It's getting a little out of hand. I'm not going to lie when I look at some of this, but what'll put in perspective, though, let's pull up Rivian 3-year weekly chart if we can. I don't know if it even is traded full 3 years, but it'll capture all of the public trading history of Rivian. You were just talking about 7-month highs, I think you said. We talked about its performance on a year-to-date basis. When we get this chart up, look at what it looks like in the history of Rivian. It's really, really impressive just how much value
inverse
this
cup here on
company is
Tesla.
able to lose.
I make a
so
handle.
don't care
Might even
how
fill that
strong
gap
it's
up there.
been. If I'm an investor, this is what I have to look at because so many, I don't want to say we're swindled, but let's say bought into the hype of this company, and they bought in at a lot higher prices than it currently is.
Swindled for sure.
The run-up recently, isn't that ridiculous? Because it's barely been any run-up if you really look at it that way.
Yeah, I guess I was talking more about Tesla, but it's still impressive. I mean, you got to look at it from whenever you were interested or got in a stock, right? If you got in at $10, you've realized all of those, or $11 where the low was, you've realized these returns. It's up a lot from $11 and some change, but it's down extraordinarily from a nearly $180 top tick. And it's not like it ran up there and came straight back down. It spent a lot of time in this 100, or higher.
I'm humbled to
level.
answer. What'd you ask?
I think Rivian's kind of thus far been a little bit of a disappointment for many. We'll see if it can build on this
I also have a
comeback, but
question.
It's got a long, long ways to go.
It does, and I think
Is there a gap by between 30s and 50?
An automaker, they
Yeah. Yeah, there's lots of gaps up there.
Two upvotes, I would say being, well, they don't have anything to do with each other. They're the most
Let's see.
stable of the four that being serviced
Yep.
now, as well as McDonald's. Both have
30
earnings
and
6 weeks to look forward
50.
to. Both are seeing a little bit less volatility this week.
No.
So we'll be diving more into the technicals as well as looking at some
Like a
example
gap from
trades.
30 to
Both of those
50?
names coming up next.
There's small gaps in that area. I don't remember seeing a gap above 30. I don't think so. Decrease your time frame. Highest gaps I see are in the 20s. 2250. Okay, you have a tiny gap there. I think that's probably within the threshold. 56.45. Oh, that one's actually real. You do have one at 75. 76. Doesn't mean it's getting filled. This all got filled. Granted. Permission granted, granted. Just buy back because that gap. Just because the gap. I don't think there's any lower gaps considering barbecue is making all-time lows for months and months and months. Slowly grinding, so I think we took care of all of them. Yeah, no gaps since OTC that have not been filled. Today we filled that last bit of the one from yesterday. That volume today on that rip. You guys went crazy buying that dip. I forgot. Dick. Afternoon, Jay from the Bay. What do you mean you did your best? About to fill the 500 gap? That's your best TA work? Oh, 5.5 on neg. Surprising. It doesn't look like it's gone anywhere though. BBIG's at 8%. New high of the day. Nice. XXII 50%. Oh yeah, still climbing. On AAP, this one had a pretty good range of trade if I remember correctly. No, it wasn't this one. It was another car one. Another auto parts one. Nice little divvy. I think they just lowered it. Is that why it sold off? I would presume. .4% now. That's pretty weak. As far as a company or TA, or what do you mean? Looks like it's at a nice low though, but it's consolidating. So there you have a bear flag. That's a pretty long time frame though. Yeah, it's good. It's good setup for a pretty good trade. Kind of slowly climbing up. I almost want to retest a double bottom or something to form, but I'm not sure it's even gonna go up. This is pretty weak. Financials are pretty rough. Yeah, I mean, they just cut their divvy pretty heavy, huh? From $1.50 to $0.25. 3.4 billion in revenue a quarter. 90 million profit, which is down quite a bit. 4 billion market cap. Doesn't seem terribly valued, really. It's just probably going in the wrong direction, which is hurts evaluation. What price target? I mean, what price? You moron. I don't know if I want to trade it on TA anymore again, because it favors those that just buy it when it's gone down a bunch based on awful news for you as the shareholder. So I might just buy it when it's gone down a bunch based on awful news for me, the shareholder. Somewhere to Burlington. No auto parts stores, they kind of killed it during COVID. Sorry to hear that, J Souls. A choppy day for sure. But what if it just goes up now? Yeah, I mean, like I said, if it breaks this level, maybe. But I don't know. It's got to be in the right. I don't know. If it can hold above this trend, like inverted head and shoulders, I might consider it. But I still haven't looked into that docket or anything that really drops. Just been little bits I've heard here and there from you guys mostly. So I'd like to see what that actually says and kind of get a better idea.
That means they're making a little bit more
This whole
money,
rally, I
which is
mean,
seen as a
literally
good
could have just
thing,
been from
for
people just dip
investors.
buying
And
where
so say you're along those lines of thinking. You see that there could be
and
some
there's no
upside,
fundamental reason
but
for
it's
it.
been so difficult for it to break through.
BBBYQ
$300
10.5,
level.
nice.
So we're basically selling that $300 straddle. We're leading the stock higher ever so slightly because the current share price is about $296.5, and so $3.50 to get to that level, which would be our best case level. But we actually sold an iron butterfly, so we define the risk by buying then $15 wide wings, and we're able to do this whole package for somewhere around a $7.5 credit. So that means we risk $750 to make a maximum of $750, but that maximum amount in terms of max profit is right at the short strike. In this case, that's 300. But really what it does is it widens the break even. So the break even to the downside is 292.5. To the upside, it's 307.5. So this is a neutral strategy, but you could argue that it's bullish to some extent because we got a lot more room to the upside. The stock does nothing, however, and let's say we get through earnings, get to next week's expiration, which is the expiration we selected, the July 28th, and the stock was still 296.38, which was the last trade that I just saw. Well, that would be a profitable spot for this theoretically at expiration. So that's why I'm going to call it neutral. But you could make the argument that it is a little bit of attitude with this one as it leads towards 300. But more importantly, Jenny, the risk is outside those long strikes. So you're going to need a big move one way or another to reach that max loss. Below 285, above 315 is where that $750, that full risk.
Okay, now to shift gears here, but I guess not shift too far as they both do fall into this technology space, like you were making the parallel, and they both have earnings next week. ServiceNow here. In terms of the technicals, Rick walks through what you're seeing. This is another name that has been a strong performer on the year, actually much outperforming McDonald's, up about 50% since the start of 2023.
A strong performer indeed, and fairly straightforward in looking at the chart analysis here. We can see that we've just been trending upward pretty nicely since a little bit after the last earnings event that we logged. And following up that trend line in white, you can see we also broke above our +1 standard deviation channel. As you recall, that means we were more than +1 standard deviations away from our blue linear regression line, our line of best fit. So we've given back a lot of those gains, though. It was looking like we could be making a push up to that +2 line. And just as a general kind of anecdotal evidence, stocks typically tend to stay between -2 and +2 standard deviations. It's uncommon for them to go beyond that point. It certainly does happen. It happens, during an extreme move upward or downward, if you were on the unfortunate receiving end of that. But around that +2 mark is where you could expect typically to find some resistance here. Or, we can look at it as it would be a breakout point if you think the move is going to keep trending further upward. It's a way to look at support and resistance in general. So we can see that we looked like we were heading up toward that +2 channel there in orange, but we're retreating back downward. Now we're more close to our trend line here once again, and we are not really taking out any significant support or resistance levels with the move during the past couple days. Looking at the RSI, we can see that our measure of momentum has slipped out of the overbought area. That's that threshold at 70, and that would be a bullish sign when you cross into it. It's a bearish sign when you cross back out. We didn't spend very much time in that overbought area either there, so that was not really what the bulls would have wanted to see, but it's still not looking bad or anything. It's still in the bullish side of the camp, but we do have the potential for a bit of slowdown here now. In terms of support and resistance at the old highs near 613, and then our +2 standard deviation channel near about 629 would be some reasonable places to start looking potentially. And in terms of support, first at the old highs near 574, that's our green dashed line on the chart. And just below that, we once again have a confluence of our 21-day exponential moving average, with this time with the +1 standard deviation channel coming in right around 569 or so. So those would be some areas to watch.
All right, Rick, really great breakdown on both of those names. ServiceNow looking a little bit more optimistic here, but also sort of lacking that overall momentum, like you said. Appreciate the insight, Rick Ducat, our chart master. So now in trading this name here, Alex, walk us through what you're thinking, maybe leaning into some of this optimism overall, but also considering that, we have volatile events. And I think next week's market will be an interesting one with just so much going on, including ServiceNow and McDonald's earnings.
Yeah, what we're looking at here is selling a neutral to bullish strategy, but giving it a little bit of attitude, a little bit of omnidirectional elements, increasing the probability of success ever so slightly as we do have that earnings event to tangle with. And so I know we have it listed up there as selling a put vertical, but it's really selling a put butterfly, and it's a little bit skewed as well. We're buying a put debit spread, we're selling a put credit spread, combining them at the same level. They converge at that short strike, which in this case is 550. And that creates the butterfly spread. It's done for a credit, so above all of our strikes, if all these options were to expire worthless, it'll actually perform a lot like a short put vertical spread. But it's a little bit more interesting. This one is a strategy that the best case scenario is actually a price lower. It's at that 550 mark, and the reason it is that $2.50 wide spread, the debit spread that's smaller, starts working for the investor, while also that much larger $10 wide spread to the downside that you're selling is also working for the investor, and that creates an interesting piece and a possibility where an investor can capture more than just the credit and actually see this expand a little bit greater. But when you're looking at it, the break even is down at 546. So the max profit potential is 400. The max risk is 600. And when you're looking at this strategy, really an investor is hoping for a small down move and implied volatility to go down. Current share price is 584. If post earnings, this stock was in the 60-ish range, and implied volatility came down a lot, that would be kind of a good place for this one to be going into that expiration day. But stress-free version of it would be any move to the upside or an unchanged move post earnings. As again, this is done for a credit, and that is ultimately a profit potential for this one as well, which is that all these options just simply expire worthless. So Jenny, neutral to bullish strategy, a little bit omnidirectional, high probability of success. Break even is at 546 on a stock that's currently trading at 584 on a $5 upside move here today. So it gives it a lot of cushion, but we got a volatility-inducing event next week. It absolutely could break through that.
And a name, I always forget, a relatively high price tag just compared to some of the names we talk about. Obviously not relative to, say, like a Chipotle, but relative to, a lot of the names we look at on this show. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risks like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. So we are talking all things Live Nation. The concert name will look into why we're seeing shares outperform on the session, coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Welcome back to Next Gen Investing. It's time for a look at a developing story with Kevin Green, senior markets correspondent for the network. So Kevin, we are looking at all things Apple here, and this name I heard is struggling with some iPhone 15 production. So I'm concerned. I'm long due for a new iPhone, and I'm thinking, is this going to make it more difficult to get the latest iPhone once I finally am able to upgrade?
It does appear so. Potentially from a source here from The Information, which is a reporting outlet here, they are stating that Apple is having challenges with making its larger screen for the iPhone 14 Pro. And they are also saying that suppliers are actually utilizing a new method in order to develop these newer screens and to be able to make it a little bit more sleeker. Now, we also have Bazinga coming out and saying that the displays that are created and made by LG Display have actually failed reliability tests during their production, which is going to potentially cause delays and shortages. And manufacturing problems may also result in obviously fewer units of the iPhone 15 Pro and the Pro Max models that are expected to roll out here in September. So yes, this could cause a situation where supplies could be fairly low, prices could be high, but it could also impact margins when it comes to Apple's bottom line as well. And that is something that we also have to consider. So Jenny, at the end of the day, hopefully you're able to get your hands on one, but we've heard these type of issues when it comes to manufacturing processes with Apple before. We know the VR headset is also facing some challenges when it comes to manufacturing and trying to scale that up. And we do see a significant drawdown when it comes to their expectations for that VR headset compared to what they initially thought. So hopefully this is not going to be another trend that happens for Apple when it comes to other products, but having two major releases, having manufacturing issues with them could impact them later down the road here in the third and fourth quarter.
Right, and this could be a margin story I'm seeing just based on the fact that these higher priced iPhones then, don't necessarily bode well for Apple's margins. But this is not the first time, like you said, they've been met with some production issues and they've dealt with their own set of supply chain woes, but they've been able to shake it off pretty well in the past. It's amazing how resilient Apple's able to be. So into this earnings event, which isn't until August 3rd, but is obviously on top of mind for so many investors, what are you sort of watching here for Apple?
Definitely looking at their guidance moving forward, trying to hear where they see, some potential challenges when it comes to the manufacturing processes, as well as their
high climbing here, almost a high of the day.
But I think once
Nags
again,
up 5.5.
some of these products. Once again, this iPhone.
We're watching BBBYQ
won't be released until
up 10.
September, so we probably won't see the initial impact until Q4 earnings. The VR headset's not going to be released until next year, so that'll be further down the road. But if they do acknowledge that they are having some
escalator
when it comes
pattern
to trying to develop these products and try to meet the demand. Then that could be something that elongates the sales cycle. And as you said before, they've had these type of issues in the past, and it does not appear that it has impacted consumers actually buying these products. It just takes a little bit longer for them to be able to pick them up, and maybe they're going to be able to realize that revenue down the road, maybe a year from now.
Yeah, and Kevin, my thinking is always like I have an iPhone 12, I think, right now. So if I've waited this long to upgrade my phone, I can wait a couple more months. I mean, what is a few more months in the grand scheme of like 3 or 4 years going to hurt? But we will leave it there. Appreciate the breakdown on Apple. Kevin Green, senior markets correspondent for the network. Now I'd like to bring back in Alex, and it's time for FOMO. So we are looking at Live Nation, and this is one we don't discuss very often, but it is outperforming the market today. Although I say that a little bit too soon because we are starting to see things build, at least here from a NASDAQ perspective. This name has still been a relatively strong performer on the year, but it was just absolutely
BNGO up 3.
No doubt, and it's been really quite interesting to watch this dynamic play out in terms of, would there be a return to live in-person events? And, a couple years ago, there might have been a bigger question mark. I think the answer has been resoundingly that yes, there has been. And despite kind of concerns about maybe consumer spending getting wobbly at times, I know we call back to that Citi analyst talking about travel expenses coming down. But what we've seen is that this particular part of the market, kind of concert attendance, has been sky high. The Taylor Swift tour that came and is going around the world right now seems to be, I think I read an article that it's like boosting local economies when it comes into town. So there's clearly some of this is going to be driven by the concerts that are going on and some of the tours that are going on, but there's definitely interest in them.
There's definitely, there's the Beyonce. I think it's this week, actually, that Beyonce is coming to Chicago. That's another major tour that is top of mind for so many. There's Lollapalooza in Chicago, which I'm going to for the first time in my life. I can't actually believe I'm even saying those words. So there's definitely interest in some of these concerts. If you've been to a concert recently, they are absolutely packed, and demand has been nothing that's
revenge concerting.
Some of these major headline concerts, like the Eras tour, of course, with Taylor Swift. But we are seeing some analysts today on Live Nation see pretty optimistic in terms of the breadth of their inventory, which they think is well positioned to deliver more events to a wider network of fans. This is according to Oppenheimer. Now, the analyst did initiate coverage on Live Nation with an outperform rating and a price target of $110 a share. They said that music fans could reach around 155 million in 2025. That's in line with the company's long-term fan target of around 175 million. They also do see Live Nation as a leading concert scale, disproportionately benefiting now from music streaming advancements that are enhancing the global distribution and artist recovery to boost fan engagement and create more Latin demand opportunities for the platform now across the board. They said this dynamic, along with ongoing sponsorship segments and agreements, are creating a more durable financial profile, and they are now confidently underwriting their EBITDA growing at about 12% now into 2025. I think that this story is so interesting given the fact that there is a regulatory, proponent really of Live Nation. This is also a company that's been met with some backlash, as it has seen that some of these companies then do make you pay, as us as consumers, surging
You hate Live Nation.
Tickets. So it's just, I find this story really fascinating, but nothing but optimism here from a business structure standpoint from Oppenheimer today on Live Nation.
What really I find fascinating about this particular company is that this entertainment space, if you think movie theaters or you think kind of travel
Med's chart looks pretty nice, actually.
Be it hotel providers or a name like Airbnb or of course airlines, definitely in the cruise liners, post-pandemic, they're lower. They've recovered some. There's optimism building, but they're not at like all-time highs, or in many cases they hadn't set new all-time highs. Southwest kind of like got back to the same level and then kind of fell back down. Live Nation before the pandemic was a $76 stock. In the beginning of 2022, it got all the way to $127 and some change before falling much of last year. But it's currently sitting just below $100 a share. So this company kind of just right back on trend for where it was prior to the pandemic. And it's quite fascinating considering that, for a long time there were just not concerts going on, and they were able to kind of navigate that effectively. And from a shareholder standpoint, really performed quite nicely.
Gosh, that was the worst. That really brings me back to a time when every concert you had planned or every vacation, everything you had planned was canceled. And I do not miss those days 1 second, Alex. That was so depressing. And sporting events. Every sport you were looking forward to was canceled. So that was horrible. I'm glad for Live Nation that things are more back to normal. Shares are up about 40% this year and also up about 3% this week. So seeing some outperformance, at least on a week-to-date basis here. So walk us through what you're thinking as far as an example trade goes, considering this was really optimistic today out of Oppenheimer.
Yeah, stock's done quite well. We talked about that, and so I looked at a strategy
so
that
wise.
would lean into the optimism, but acknowledge the performance that it has had, which has been quite strong. Selling a neutral to bullish put vertical below the market here, keeping it relatively tight, $2.50 wide, to really maintain the risk. I wouldn't say that this is the most liquid name of all the names that we've talked about from a trading standpoint, and so sometimes traders seek to limit their exposure in names that maybe have kind of different risks than some of the other ones that we talk about. And so selling in August, 95, 92 and a half.
Netflix to zero.
We're able to get about 75 cents, let's say, for that, which is what we looked at here. That would create a situation where you stand to make a maximum of $75, not accounting for fees, on a total risk of $175. That risk is realized if all of these options are in the money and they go through assignment and exercise, offsetting themselves to $2.50 wide spread. Net of that 75-cent credit leaves $1.75. Of course, because options are priced in one share, but they deliver on 100 shares, that means $175 in risk. The break even is 94 1/4. You find that by subtracting that 75 cents from the short 95 put. And again, 75 is the max profit. That is realized if these options expire worthless, and that's most likely to happen if they're all out of the money. So again, another name where we're just kind of asking for it to hold on. It doesn't need to do much of anything. Time passes, this
starting to build this
good chance this one's profitable.
And the
thing's starting to turn around. These big inverse head and shoulders.
The market closes. We also have that to look forward to. It feels like every single name that we are looking at has earnings next week because it is so
it doesn't look like we're gonna get the full cup.
We'll do it for our FOMO segment today. Now coming up
I guess
next,
we still could.
We'll look at Chipotle.
There's some
we will look at one of the
slowing
best
down
names in the restaurant and food service space, as this name has just
maybe
continued
not
to rip higher. We'll discuss that more coming up next.
Did you hear that start? It was just like a record. You know what? Fine, about to make a new high. You guys are just sporadically cheering on barbecue. Oh, this is spy over here. This isn't barbecue. This is barbecue. Nestle. BBIG might want to come back to BWAP for some safety. 140, new high of the day there on SPY. Just paying attention. This was a nice long. But it is a choppy day, so no problem. Yep, new high there.
That compete with companies like Li Auto, which we've talked about on this program. We know Tesla is a big seller in China. Boyd or BYD is another Chinese auto manufacturer. But I think if you look at XBEV, and I can see why JP Morgan is actually re-rating the stock as an underperform, but they did move their price target from $7.50 to $10. It really comes down to scalability. I mean, if you think about Tesla in the U.S. markets, they've been cutting prices, and that's again creating a situation where traditional automakers are forced to cut prices, companies like Ford, General Motors, but at the same time, electric vehicle manufacturers globally like XPEV in China are also forced to cut prices, and they're least able to afford those price cuts. So what I mean by that is if you look at JP Morgan's call, they're looking at challenges from a margin standpoint for this particular name in particular because, again, you have to consider the company's margins from a gross margin standpoint is actually less than 10%. And so when you have gross margins that are less than 10% in any company, that gives you an idea that they have to sell their products at higher prices or they have to reduce costs significantly. Now, we know pricing power is a challenge in this environment where scalability certainly matters, and that's where Tesla really shines. Their margins actually have compressed also. If you look at Tesla's gross margins in the past year, they were around 24%. Now they're down to 21%, but at the same time, their net income is positive around 12%. But if you look at XPEV, their essential net income is negative 45%. So we've got a company that's really challenged. You can actually see deliveries were down last quarter by 54%.
Whoa, you see, guys?
Reported earnings in May.
You see him getting sandwiches,
Sales
falafels.
were down 39%,
Awesome.
and earnings was down about 18%.
XXII,
Again, a
61%
loss,
now.
which means that the loss actually got worse last
12%
quarter. So
on
I can see why the
BBIG.
stock is underperforming on a year-to-date basis, but also
That's behind
in the
34.
last year, the stock is down about
Maybe
64%.
35.
If you are interested in the Chinese auto manufacturers, I mentioned BYD just a moment ago, but if you look at Li Auto, that company is actually moving in the right direction. Their sales growth is about 64%. And they're actually very close to GAAP profits. And I think that really speaks to why that stock is higher in the last year versus versus XPEV, which is down significantly.
You know, along those lines then, George, that's actually what I was going to ask you about is do you think that very direct, even though they're kind of targeting a different market, they're making a different product, but still an electric vehicle maker, you got one in Tesla that's seemingly maturing as a company and doing things at a bigger scale, and while they're sacrificing some margins, they seem to have a plan and investors trust them. And then you got Li Auto executing
Trades, I have noticed every dip's gotten bought. So that's maybe my new strategy with barbecue. Just don't hold shares. Wait for awful news fundamentally for shareholders. And then join in all the shareholders on a huge dip and buy it up.
Does it exaggerate that struggle a little bit more?
It does. I mean, if you just consider what effective scalability means,
High of the day there on
you're
BBIG.
actually selling higher volume, but you're actually selling at lower prices. That's effectively what we've seen happen across the board in the EV space. Tesla's margins have compressed. I spoke about how they were about 24% on a gross basis and 15% net last year, whereas last quarter they were around 21% and 12% respectively. So they actually lost 300 basis points in net income margins. But the stock itself has been performing quite well on a relative basis if you were to compare it to, let's say, XPEV altogether. And that gives you an idea that if you are showing sales growth, then you can afford some margin compression. XPEB has actually shown sales contraction over the last year, while at the same time margins have compressed. So you're getting two of those variables going against you. So that's where the underperformance really lies with the company. Obviously, there's going to be different brands, of course, and of course different products that each individual manufacturer sells. I can't speak to all of the different variables in that regard, but from a financial standpoint, it just ends up being a situation where XPEB's margins are compressing, and at the same time, volumes are down as well as sales growth. So all those metrics together speak to a stock that's been underperforming. You just can't fight the trend. If stocks are showing revenue growth, that's the top line. If they're showing margin growth, that's good. That can offset some lower volumes, but what we've actually seen is margins compress and volumes increase across the board in the EV space, and those have scalability. Companies like Tesla and BYD and Li Auto, those are the ones that have been performing rather well on a comparative basis.
So, George, some of the headwinds we talk about when we look at a name like Tesla is the growing competition in China, the fact that market is not recovering at the same pace that we would have hoped, and just the fact that they still have production issues they're working through. So I see all those weighing on a behemoth that is Tesla. I mean, how does a name that like XPeng really then compete? Because you're going against companies that are more established, BYD, another one that you mentioned, but I just see that some of these names that are new entrants into the space, and it's a very difficult time right now to be expanding your EV business.
Yeah, that's the thing. I mean, at the end of the day, you have to be expanding your sales volume. And like I said, deliveries for XPEB were down 54% as it reported last quarter. That's not good. And I think that, again, speaks to why the stock has been underperforming. And they're really facing a challenge because we know everyone's at the race or racing to produce more autos and EVs. And those that are having some production challenges are showing some high demand. And that's companies like Tesla, BYD, they have great volume. XPEB, unfortunately, has been showing some contraction in sales. And again, it might be because of product availability, but it also might be brand and reliability as well. I can't say exactly what's going on with the product itself, but they're facing some challenges. And I can see why JP Morgan is still maintaining an underperform rating on the stock. And keep in mind, that price target is still about 40% at $10 relative to the current price.
And this name, George, when you zoom out and look at the long-term picture, it's been a pretty steady decline, and we've just been stuck now at this lower range. So it's been a brutal story if you were into this name around $60, $70 a share. But we will leave it there. Appreciate the insight all week long, George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing for the week. Coming up next, we have the watch list.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock. Takes a more numeric look at similar information. If you find any of the
trades, I think they'll let it rise. XXI broke out there. Ooh, another 20%, like in that candle. It's gotten hit with top 22%. It's just gotten hit with bad news, or I mean, I don't know, maybe it's not bad news, but more liquidation, more news of reality, and caused it to sell off. If that didn't drop, when you get that docket and that somehow restructuring plan that has nothing to do with restructuring, it sounds more like liquidation, then I think we would have finished making this handle and could have been on our way past 40 cents today. Now we've just got to wait. Build up some buyers. Hit the like, you freaks. You freaks. 35 likes, not bad, guys. I appreciate it. What a volatile day for barbecue. Two o'clock, right on schedule. Are there any Twitter spaces we can go listen to?
Of course, live from the floor of the New York Stock Exchange. Let's take a quick look at where the markets stand with only 2 hours left in the trading day and the trading week. Looks like we could end the week on an upbeat note. Seeing green across the screen, stocks able to hold on to those gains. Dow Jones Industrial Average up about 0.3% right now, going for 10 straight days of gains. That'd be its longest winning streak since 2017. Intel is the top performer. Amex, though, is the biggest drag. Meanwhile, the Nasdaq is basically up about 0.4% as well. Energy is leading the way. Industrials are limiting the gains. The S&P is seeing some modest gains, up about 0.4%. The Russell is seeing the most minimal gains. It's only up about 0.1%.
Barbecue coming back down a bit.
Taking a look at some of the futures products.
Very low volume. 378%. Oh, it hasn't updated. Just came back for a little bit. A little quick update. 12:30 or 2 hours, hour and a half from when it's last updated.
Let's welcome in Kevin Hings, co-host of Fast Market.
We're gonna break the borrow fee record.
I want to talk to you about the Nasdaq rebalance, but before we actually get more specifically into tech, just kind of want to get your thoughts on the market action that we're seeing to wrap up another positive week. Could be 10 straight days in a row of gains for the Dow. What are your thoughts?
Yeah, hi, Caroline. No real concerns, it seems, by this market going into the end of this week. With yesterday's news in Tesla and Netflix and the price activity, the market seems relatively calm and unconcerned with, well, number one, a NASDAQ rebalancing. Number two, the massive amount of earnings and data and Fed meeting that's coming up on the horizon, Caroline. Well, the day isn't over yet. We still have 2 full hours of trading before the week and the day ends. So let's see. The market, the NASDAQ's been all over the board. It opened higher. It was down for a while this morning. Now sitting, like you said, about 0.4 higher. But Caroline, as you know, these markets are getting a little whippy.
Guys, just
there's still
pumped.
a long way to go
Just bullish.
before this day and this week is over. But right now,
All right, we're gonna watch, guys.
2 o'clock Eastern, pretty calm here. You
Guys,
can tell by the
Malej.
VIX down now below 13.5.
This makes a publicly traded shell company.
Let's talk about the NASDAQ rebalance. What impact could we see that have, especially ahead of a big mega cap tech earnings week next week?
Yeah, it's interesting. I've been through about a couple hundred of these rebalancings or, names moving in and out of indexes. And the general thought is there's going to be market on close balances or ways you got to get in some stocks and out of others. It appears in the NASDAQ you've got to get out of some of the large cap tech, that Magnificent Seven, and into some of these other names. Is that going to make for a volatile close?
Hi there on
It's hard to
BBBYQ.
say, actually, right? They're being very vague and not giving very much information about what will happen on the bell today. But I expect something to happen, Caroline, right? I mean, some traders will probably work orders during the day to rebalance their NASDAQ. Some of them are going to probably do it on the close of trading today. Does that balance out, or does that cause some imbalances in buys and sells? Wait and see, Caroline. I don't know.
Yeah, next week we have Microsoft, Alphabet, Meta all reporting earnings, so it's going to be a busy week on the tech front as well. Also, I've been hearing about some
The one
production
that came
issues
out last
with
night,
Apple with
Maui.
the next generation iPhones doesn't really seem to be impacting the stock much.
Supposedly
Basically
that was
flat
their
today. What's the latest
Chapter
there,
11 plan.
Well, the
They
news
heard in
is,
the court
the
hearing.
story that's coming out is they're having struggles with the iPhone 15 Pro and 15 Pro Max screens. They're trying to narrow the width of the bezel, and apparently these screens made by LG, they're having some issues
I agree, Trace. It is happening pretty fast.
Operative word there, cause some shortages in some of these products going forward. Like you mentioned, Caroline, if this was a real serious issue, I think
15% on BBIG.
Would be reacting to
Barbecue's
it.
coming down a little bit, down 10.7.
Down less than 1/10% today. So I don't know if it's certainly not catching a bid because of this news, but also
Furlong's expertise? No.
Catastrophic event going
I don't
in
know his expertise, but I don't think so. He's a pretty young guy. It came from Amazon, so I'm assuming that's kind of his first big gig, basically.
At the end, when the earnings finally come out, never seem to materialize. So we'll keep watching.
You're wondering if Furlong's
but the stock is telling
on
us
the
no
barbecue.
effect on Apple.
Yeah, we'll keep an eye on that. Although we won't hear from Apple.
It is crazy if he
August, so have a little bit more time
let him go and then tweeted that, though.
Thanks so much for kicking off the show with us.
That's just completely ruthless.
All right, now let's take a look at the bigger picture with Russell Stone, CEO and owner of Scranton Financial. Russell, thanks so much for joining us.
SPY's coming down to VWAP.
Carolyn, how are you?
Things up almost 6.
I know, it's good to have you on, although I was taking a look at your notes, and your notes don't seem all that pretty. Kevin Hinks was just saying how there's not a whole lot of concern for this market heading into the weekend, so investors clearly haven't read your note that says, forget recession, we're in a depression. Make the case.
Yeah. Okay, very easy. When you look at all the metrics, I gave you a sample of just a few: crude oil, natural gas, heating oil, lumber, titanium, lithium, all sorts of major components of our economy. And the prices are going down, but not by a little, by a lot. 60%, 70%, 20% across the board. Deflation is what we're into because we have rising prices.
What use this line?
We have stagflation in wages. We have all sorts of problems in the banking sector. We have all sorts of problems in Ukraine, all sorts of problems in China and Russia with contracting economies.
This line right here?
In Europe. How on earth do we have
that we broke through?
Optimism that says that the markets are going to go up and the economies are good?
Oh, what line?
None of that is true.
Most of these lines are useless. This thing just dumps on dockets and rips on awful news.
Money managers, the average investor has
BBIG starting to rip. Starting to get squeezy up here. Almost 20%.
Russell, I was taking a look at some of the numbers that you had. Crude down 17% year to date.
Clark Kent.
Down 67%. Some of the metals down, lithium down 37%. Coffee,
see if we get some resistance up here on
but how does this play out? When do we actually
Ginkgo Ventures 3283.
Because so far that's looked pretty good.
First real resistance area.
Look at the housing data. Look at every category in the housing data. It's new home sales.
Look at the housing data.
Home sales, new home sales, annual rate of building. They're all down from last year and the year before. Initially, when the numbers get down to the magical 2% inflation, they're going to tout it as great. Our policies are working. But when the prices continue to go further down and further down, then they're going to start to worry because that is deflation. Notable, incredible people like Robert Prechter, right? Notable deflationists, Peter Schiff and others. Notable deflation right now.
3-2 on BBIG.
I agree with that. I see it in the spending patterns of people.
I should sell a couple calls here.
People come into my office and they're not spending money
or hops.
On cars, on houses. They're putting off vacations. They're doing all sorts of stuff that you would expect in a deflationary cycle.
It's not necessarily, though, what we're hearing from. It's not necessarily, especially on the travel side, and what we're hearing from some of these airlines who are saying people are not only buying tickets, but they're paying up for more legroom and for, business class or first class. But
I do 3.5.
What should the Fed do next then? It meets next week. It sounds to me like you think that the Fed should be cutting sooner versus later if we're in that doom and gloom of a scenario.
Well, no, I don't think cutting interest rates is going to help. I think we need to raise interest rates. But let me speak to that point you just made. I travel a lot. All right, I was in Seattle 2 weeks ago at 7 o'clock at night in one of the nicest restaurants in the area that we were in. We were the only person in the restaurant. 4 of us, the only people in the restaurant. It was 7 o'clock. It should have been prime time. I see malls.
You remembered your question? That was it. I don't know, Granite.
Nephew sells cars.
Looking at BBIG.
He doesn't have a lot of
Barbecue built the bull flag.
I went to register a car in Connecticut. I have to wait 4
That's
weeks
neat.
instead of an appointment just to register a car. It's crazy. So there's just a lot of problems. And think about the data. The U.S. government is $32 trillion in debt. They owe $1 trillion in interest on that payment, and we have $192 trillion in unfunded obligations. How
Yeah, I
on
might sell
earth
some
are
calls
we
on
going
it.
to motivate
Just
the
keeps
economy
ripping.
when we can't pay our bills?
So I'm confused as to if you think that we're in this kind of depressionary
I mean, this thing can go crazy. I maybe shouldn't sell calls yet.
Fed should cut, why you think the Fed should continue.
I haven't really even had a breakout day on it. It's been on a nice rally, but
Whether they should or they shouldn't,
today's the first
the
like
Fed has very
big
little
day.
control over that. The Fed follows the market; they don't precede the market. That's proven in the data. So everybody expects the Fed to cut. Well, if the market cuts interest rates, the Fed will cut interest rates. I expect them to raise interest rates. If you follow the 3-month Treasury and then
Put an
compare
order
it
out
to
to sell
interest rate
some.
hikes from the Fed, you'll see that the Fed is
Pretty
following the
high,
market.
so they might not
They're
get filled.
preceding it.
Okay, so let's talk about what investors should do.
Just saved my barbecue money for BBIG.
Exposure because cash is kind, but where do they keep the cash? Because it seems like you have some skepticism around banks.
I think it's just caution. I think banks are struggling right now, as most people understand that. But if you have a Treasury-only money market account linked directly to your bank, you can store the money in the Treasury-only money market account, which is a better guarantee than FDIC insurance because you have the fund is only buying T-bonds, T-notes, I mean. So I would do that and then just move money back and forth between the bank and the money market account as you need it. I don't trust FDIC insurance because they only have $128 billion to fund $10 trillion. Not enough money. It's only 1.2 pennies for every dollar that they're obligated to.
You're making a big cup here.
As much physical silver as possible. Why silver specifically versus gold?
You can buy 80 ounces of silver for every 1 ounce of gold. As long as that ratio is that distorted, it should be about 16 to 1. You buy silver all day long, and then when that ratio gets
150K mo
20 to 1,
barbecue.
16 to 1, you sell off half of your silver, buy gold.
Dude.
But right now, silver is the best deal on the market. It's most underpriced, and it's going to do very, very, very well as people are concerned about the U.S. dollar being the world's currency reserve. They're concerned about banks. None of those issues went away. They just went off the news cycle. All right, that's my problem is people aren't talking about banks. They should be. They're not talking
Little
about
spread arbitrage play, huh, Guts?
the U.S. dollar. They should be.
I was just looking at selling next week's.
And just quickly, put off large purchases for 6 months and then
I'd rather sell next week's and buy further out in time, ones that haven't inflated as much.
If I'm correct and we have deflation, if you're going to buy a car
Right.
now, say for 40,000, you might be able to buy it for 10. I mean, for 30. You know, if you're going to buy a house for 400,000, you know that house might drop down to 350 or even 300. Deflation. I've studied deflation for 23 years now, and this is a deflationary cycle. And the reason why people don't understand it is because it only shows up every 80 years. So the people that are running the economy don't know what happened back in the 30s, so that they can work against that. Your grandparents, or you're young, so your great grandparents lived through the Depression. You probably
Oh, would you meant to say it the other way
from
around?
your parents about how they managed their money.
Yeah, I like that
Same
play.
with my
Sell the
parents,
short,
my
buy
grandparents.
longer.
So we're going to change
Good.
our spending
Or
habits
just
for a while. And
sell
the
the
good
calls
news
and not buy
is
anything.
everything's going to be
IV's high.
repriced, and then at the
I
bottom,
like it's something I really want to buy
those who
into.
are sitting in cash can buy at the
Maybe a
bottom
spread.
at prices that they never thought possible, particularly real estate.
Pretty cautionary tone. We have to
It's
leave
not
it
like
there.
pricing
Russell
earnings
Stone
right now or
with
anything,
Stringent
so it's not going to be a
Financial.
huge
Thank you
amount
so
of.
much.
Might be crushed the
Thank
next
you
week
very much,
compared to,
Carolyn. Have a great day.
you know, if there's an event.
You too, and a good weekend. Later this hour, Wedbush's Dan Ives joins us to talk Tesla earnings and what he says is the company's golden vision. We'll also look at the future of using AI as
Spy,
a portfolio
flush down the
manager
view
and
up there.
hurdles the tech still faces. And our panel looks at earnings from big credit card companies, what investors should be focusing on. But up next, is there still upside in the tech sector? We'll take a closer look at that and 3 stocks to watch.
Sell it all now, Molava. Don't let the pee-pee poison in. 6.7 on neg with some volume. See a little more of a push. Push. Sell the calls, buy the puts with a premium. That's a smart way to do it. Nice proper hedge. That's like doubly hedged. That's actually just full on short. Yeah, look at it rejecting that distance perfectly. All right. What's up, John Bennett? Good morning, Psych. Good morning where you are? Where are you? Imagine waking up to seeing that chart. Double head, full short. Yeah, this is just mostly short on that. Very, very low volume. You got a lot less interest in it. You've got a lot of DRS shares. The options, you know, a lot of the volume during the day is market makers with the options chain staying delta neutral. You don't have hardly any options activity anymore on GME either. So volume will probably be low because of that too. Attack mode. I think it's at a kind of a break point. GME either making a handle here and are going to break out to the upside, move back up to 27.65, or I could see us moving down here. This is kind of the highest support I see us bouncing on. If we break here, after that I would give it some horizontal supports. 18, 15. I think if we get a market crash, we could see GME in the single digits. Wicked out of that support today. We'll see. BBBYQ. Little consolidation up here. 77% on XXII. Upwards up 36%. It's glorious. I'm gonna go get a coffee too, Lords. I must.
Good to see you, Caroline.
So, John, you know, I want to start with kind of the tech rally that we've seen, which seems to be running out of steam a bit this week. When I was taking a look at some of the Magnificent Seven, Nvidia is lower on the week. Tesla, of course, is lower on the week after earnings. Meta is, Google is, Amazon is. Is the tech rally running out of steam or just taking a breather right now, if you will?
Well, there's no doubt that valuations are stretched. I mean, if you think back to last year, peak to trough, the NASDAQ was down, 35%. Now it's up 45%. So we've retraced a lot of those losses of last year, and you've seen these names move significantly higher. What's fascinating to me about the tech rally is that the reasons that people sold technology stocks was because they thought that interest rates were going to be higher. Interest rates have remained high. But the valuations have expanded in some cases to past where they were when people were selling those last year. So on a valuation basis, Caroline, I have a hard time getting excited about a lot of technology names. And we started the year overweight in tech. Now we're underweight tech across all of our portfolios. So I think there's better opportunities. I mean, semiconductors, for example, are trading at a decade high multiple. So you have to pay a lot to get in the space. And I know the theme is great and everyone wants to talk about AI. But I think the valuations here don't make as much sense as other pockets of the market.
So might not be as much room to run for tech, but what about other areas of the market? Because if we just take a look at this week alone, healthcare, financial financials, energy, some of the outperformers. So can we expect this broadening of the rally that we've been seeing to continue? And what drives it?
I think so. I mean, if you look at small and mid caps, for example, the small cap value index is trading at just 10 times earnings. The mid cap value index is trading at just 13. That's a comparison to 18 times for the S&P 500. So that's a pretty material spread in valuation. And if you think about the composition of the small cap index, it is significantly leveraged to financial services, banks, energy, some of those more cyclical areas. And in fact, with inflation rolling over and the economy remaining strong, I think this bodes very well for those areas of the market. But interestingly, I think utilities and some of the more defensive areas are getting attractive simply because they were left for dead as you saw the tech stocks rally. I mean, utilities, for example, Caroline, had their worst start to a year in 35 years. So we're seeing opportunities in some of the defensives. We're seeing opportunities in healthcare as well as banks. I mean, banks are a super fascinating area to me because, when you look at earnings coming out of many of these, they're beating expectations, they're holding their net interest margins, and the charge-offs are not what folks were anticipating. So I think that the banking area does look attractive. You've got to, have some nerves of steel to step into some of these. But alternatively, I would pivot to October of last year. You had to have nerves of steel stepping in to buy semiconductor stocks. Now that seems very easy to do. It was not easy back in October.
So several sector plays. You also have a few specific names that you like. So let's run through those. First up, Agilent Technologies. It's off about 15% year to date. It's having a good month, up about 6% in July. Is this a value play?
I think so. This stock is trading at around 20 times earnings, down from 35 times earnings just about a year and a half ago. So you've seen a lot of compression. If you think about the healthcare space, these all became COVID darlings, whether it was biotech, whether it was life sciences. All these areas got very expensive as there was a rush to buy anything healthcare related, much like the stay-at-home basket. But you've seen a lot of multiple compression. But what's fascinating about an Agilent is that it has not had a deterioration in the fundamentals and in the earnings and in their margins. So their business is very stable, it's growing, but you're paying many turns less than you were just a year and a half ago. So, when I look at the name, you're getting, 20+% margins. You're getting giving roughly a 9% dividend growth rate for the last 5 years. So you're getting healthy dividend growth, healthy margins, and a multiple that is back to where it was during COVID.
You also like Paycom Software, ticker symbol PAYC. Tell us why.
So Paycom is actually an interesting play. So it was actually classified by GICS as a technology company in the application software sub-industry. And it was reclassified within the last 6 to 9 months out of technology into industrials, into human resources. They have a lot of the life cycle technology and software platforms that are used by businesses around the world. This company has high recurring revenue, very stable margins, and again, you're getting it at a multiple that you have not seen in over 6 years. And I think it's been, a little bit missed by investors because it's been reclassified out of technology into industrial. So you're getting kind of a technology-like name that has not participated with the technology rally. So we think this is a really interesting opportunity for investors here, and it's a significant position for us in our portfolios.
And we have time for one more. Jack Henry, JKHY, bit of an underperformer this year, down about 2% year to date. Tell us why you're scooping up this one.
So Jack Henry is an interesting name because it's actually leveraged to banking infrastructure. So it was pulled down by what occurred in the banking sector, even though it really has nothing to do with what occurred with Silicon Valley and these other banks that came under pressure earlier back in March. So it's a name that is leveraged to the financial sector, but doesn't have direct exposure like some of the banks. So it's a way to get exposure to this area at a very attractive multiple with growing business lines and is needed for the regional as well as the money center and super regional banks. So they all are tied into Jack Henry, and it's a unique position. There's not a lot of names like Jack Henry out there. And again, a name that's easy to skip over. But if you want to get into financials and you're not totally comfortable with the banks, Jack Henry would be a place for investors to consider, and we like the name here as well.
All right, we'll leave it there. John Mowry, NFJ Investments, thanks so much for joining us.
Thanks, Caroline.
Appreciate those picks. Coming up next, Wedbush's Dan Ives joins us to dive into Tesla's earnings, an increased price target, and what he sees that's reminiscent of Apple 15 years ago. Stay with us. We'll be right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm Nicole Petalides, coming to you live from the New York Stock Exchange every single market day, from the opening to closing bells. Tune in to the TD Ameritrade Network.
Look at BBIG just winding up to bust through that resistance. I love the record. Snappy happy. Yeah, what are we doing on the thumbs up? 37? Okay. Alright. Not bad. Thanks, guys. Your thumbs ups. Sorry about your barbecue investment. Oh. Just kidding. Oh, there you go. It's still flagging. Wheels up 10%. Not a bad looking chart. Body looks pretty good too. Wait a minute. Still not too sure about neg. A little bit too much of a sell-off, I think. Never mind. Perfect golden pocket, 61.8. Cha-ching. We're on. Should've gotten more. No trades. That's like... That's a witch.
Relative to where I see the stock going over the next 6 to 12 months. And I think yet again, over the coming months, the bears will go back into their caves and hibernation.
This guy's such a bull. Permable.
What is the opportunity in licensing FSD? Because I know you're bullish on that. You just mentioned it, but what's the end game there? What could that look like?
I mean, I think that could ultimately be even bigger than the opportunity that we've already seen in Tesla the last decade. Because of the software-based opportunity on FSD. And I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5-10 years, and obviously Kathy talks about this for robo-taxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at $3 trillion, where a lot of investors thought $1 trillion was never going to happen.
But Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over. Do you think he's going to have to continue to slash prices to spur demand, and at what expense or what cost to margins?
Look, I think around the edges, you can maybe see some rebates, some price cuts, but ultimately, in terms of margins, I think they're flatline. I think flattish to ultimately start to rebound in Q4 into next year. Not going to box himself into a corner, Tesla, especially what we're seeing in China. But I believe the vast majority of that's in the rearview mirror. I think demand looks strong. And you talk about the murky macro. I mean, our view, this is not calling the stock for the next few weeks. Fed, in terms of worries about, talking the tough talk, even though the white flag, in my opinion, is raised in terms of the end of these rate hikes. I look into 2024. I see a bright green light for Tesla, for tech. I think it's the start of a new tech bull market, in our opinion.
And have we seen the lows for gross margins?
I believe we have. I mean, look, it could have maybe 50, 100 bips, but I think our whole view is it troughs. And I believe we are troughing. And after the stocks had just this massive move, you'll see those knee jerks in terms of the sell-offs. But I think this is a stock ultimately, as we go into U.S. Open, we're going to have a stock somewhere in the threes, in my opinion.
So you're not just bullish on Tesla, though. You expect to see a better than expected tech earnings season over the next few weeks. It really picks up steam next week. So more good news on the way.
I think get out that popcorn, because that's my view going into earnings next week. It's about monetization of AI. It's about uptick in enterprise. I think even from Arvind, IBM, you saw little breadcrumbs there. That's what you're going to see from Redmond and Nadella. I think you'll see the same thing from Amazon, Google. The chips, we're seeing inventory worked out and flatlining, and I think rebounding in terms of demand. Cybersecurity and software and chips, I think, lead us higher, and which is why we believe tech stocks were up another 15% second half of the year. And, I could just tell you, I think it's a 1995 moment, star of the internet. This is not 1999, 2000 bubble hype.
Is there any concern, though, that a lot of that optimism is already priced in? Because when you do look at Tesla, top and bottom line actually beat, yet Tesla's lower this week. Netflix was a bit more mixed, but that subscriber figure was really impressive, and it's lower.
Dude, I know this guy is.
That, yes, we might see
That's hilarious about Tesla.
But we might not see it reflected in the stock price.
Yeah, look, it's a great question. I think it's more digestion after just a massive rally. Tech stocks up, call it 35, 40%.
35.
But I don't think this is the end. I think it's a pause ultimately before this tech market goes higher. Because when you look into 24, you look into 25, especially with the Fed ultimately white flag, where they're basically done raising rates, despite what the hawks will say, that's a risk-on environment. It's bullish for tech. And I believe we start seeing improved macro. And
I might add into BBIG even.
Or some sort of
get a pullback to this trend line again.
A range that I don't see. It's hard to find that recession.
Never even fully pulled back there.
And I love your optimism, so I'm not trying to rain on your parade.
I love your optimism.
But I'm just curious, what would derail your bullish thesis?
This is a good question. This is what I want to ask BP.
No longer the perma-tech
And Karen,
if you guys get on his show
awesome,
and ask him a
insightful
question,
questions. And I think
ask him what would make him
and I remember we talked about this in December. I think
not
the
want to be in
biggest
barbecue
fear
anymore.
was U.S. China, that cold tech war really starts to get worse and worse. To some extent, it's actually got better and better. I think it's really about the China story, supply chain, and any major disruption there. And outside of that, I'm not worried about Fed. I also still think many are on the sidelines watching these stocks move higher. I think fundamentals are going to be better than expected. I believe AI is the biggest transformative theme we've seen in 30 years. And my view is 2-3 years from now, we're looking at a NASDAQ that's much higher than where it is today.
All right, I'll be looking for your notes next week. Dan Ives, Wedbush Securities. Always a pleasure.
The thing is, he doesn't have an answer for that, and that's where it's you have to be very careful when you listen to someone's advice. They don't have an answer for that.
Kaiju International's chair joins us with what he thinks what it will take to win over investors. As we
Or if he does, it's something very unrealistic that would never happen. That's being married. Praying for their tips and miss 24s. I definitely did not want to buy a 24. I wanted to sell. Took everything in me to just hold and say these idiots are going to buy this up. Thank you. No marriage to plays. Be married to a stock, divorce is expensive. Even if everyone's right about barbecue, doesn't make it any less of an idiot play. It's been happy. Bunch of filthy rich morons out there, barbecue holders. XXII, man, what a rip. Buy's waiting for the last 30 minutes for that rebalancing. It's gonna go crazy. Yep, cuts pretty much. If you get paid from this, it's not because you were smart, it's because you were dumb. Pizza. We actually are having pizza today. Pizza Fridays. Three days before BK. Really? That was your first buy-in? Was it really? 3 days before Chapter 11? Or OTC, or yeah, delisting, I guess. Liechtenstein.
Here you can see some of the selling yesterday from 15,771 down to 15,429. But
well, at least it was really cheap.
Follow through, and This is a pretty good
I was in it
reflection of what we're
long
seeing
before
in terms
that,
of the
in and out, in and out.
S&Ps, the Dow, and the Russell.
I did sell
All
though
four
before it went to
majors have been
OTC,
unable to take out yesterday's highs or lows,
and then
so
bought back in like
kind of
2
a
days
chop
later.
trade as we head into the
Like,
end of
what
the
the heck
week.
is this?
And this has been sort of the trend
A
that
bullish
we've seen.
stock with
Not a lot of
volume in
conviction,
OTC?
a bit of a slow grind this week. 3 of the 4 majors into new highs for the year. Taking a look here at the futures now in this
I don't remember
instance,
where I
moving from
sold,
the
but
index to,
I closed out before
the
OTC.
indices and the S&P mini contract.
Jump
You can
back in
see the
somewhere
run-up we
here.
saw last month, the follow through.
But you know, I've been in and out a lot.
And how again this week we've just been kind of chopping around this 4570, 4600 area. Now another step back shows where we are in the bigger picture. Quite a move here right off those October lows, and the conviction we're seeing into this summer here up to
5,000 in
4600.
weeklies.
I'm a little bit concerned watching crude oil inch its way higher and watching yields at these upper levels, but I seem to be
That's
the
pretty
only one
dumb.
right now, Caroline, judging from the VIX as we're
Oh,
hanging out.
guys, let's watch Kai's video.
Good morning, guys.
Oh my
It's Kai
gosh.
Smollett.
Alright. Whoa.
Always happy because we are almost there. All right, guys. As you can see, the stock price went down to 24 cents, and now it's going up again to 34 cents. And most likely we're gonna close green today. Why? Because, as I said, always, Teddy Holdings LLC, that company incorporated in Delaware by the only one, Ryan Cohen, and the Teddy trademarks registered worldwide. It's not to sell kids' books. It's something huge happening, guys. So basically, Teddy is a private company, and what it needs a ticker BBBYQ to get to the public market. So they're gonna trade for almost 12 months on the OTC, and then they're gonna request to move to the NASDAQ market. So what happened last night before midnight?
Wait, why is he saying it's going to trade 12 months on OTC? What's that time frame?
There was a filing docket number 1429.
Bouncing there
1429 was saying in a paragraph that all board of directors and managers are terminated immediately. That makes that company, Bed Bath & Beyond, so makes the ticker BBBYQ a shell company. And this is what I needed. This is what I've been saying all time. So now what I'm expecting is something called a Super 8K. Remember that name, Super 8K. It has to be filed by that shell company, stating that they've been acquired. There was a merger agreement with Teddy, with a private company, which is in this case Teddy Holdings LLC, that it's gonna be acquired by that private company. And then you're gonna either have stocks in Teddy Holdings LLC plus cash, or just stocks of, you know, the shares you're holding, they're gonna be turned into Teddy instead of Bed Bath & Beyond. That's gonna trade for 12 months OTC, and then they're gonna move to the NASDAQ. Guys, we're almost there. Good.
Okay.
Which was one of the first AI curated and directed ETFs to use the technology completely from end to end. So portfolio management.
He's bullish on it.
Through to the discrete endpoint investment decisions. And that's been it's been obviously a good ride for us thus far. The recent interest has been validating, but you know it's not all smooth sailing. There's some significant trust issues coming on the back of the implosion of the previous next big thing technology, which was cryptocurrency. Again, you have a
This chop on SPY is awful.
blockchain. You have a new asset class and a lot of good novel opportunity in tokenized assets. But you know that got
It looks
mixed
like
in
it's
with
turning around though.
widespread global fraud, and now you have an understandably skeptical investor base. So we're just trying to work through that. I think, as is the case with anyone in our position.
Is trust the biggest hurdle at this point, and what are you doing to
No, he's more bullish now with that filing.
while using AI to make their investment decisions?
Yeah,
Now that all the directors are
that's
fired.
the topic of the moment, right? I mean, in the emerging stages of
Oh,
GPT just
GME.
exploding, it was just all about the
See
play.
if it holds
It
down
was
here.
about what you could do with the technology.
Might be the decider to get
On a
puts.
level where it was, not having enormous business impact.
Even though the options don't really move on here anymore.
Whether or not you trust it to write a report or do your schoolwork or whatever it is, the jeopardy there is a lot lower than making endpoint investment decisions. So when it comes to that, off the back of the crypto implosion, you do have this gulf here in terms of a lack of trust and a lack of certainty on the part of the investing community. And so what do you do about that? Well, you
I
can
think SPY's
regain
still
trust
bullish,
through
man.
transparency. I think that's extremely important in what we do. It's a
Just
bad
a
idea
liquidity
to
grab
treat
down
the
here.
investors
I don't know.
like they
I don't even know if we're
can't
going to fill
possibly
this or
understand the
finish this inverse
technology,
cup.
and don't worry, we've got
This
this
inverse head and
covered.
shoulders right here.
So participating in more Q&A, talking about how this is used, making them aware of the fact that, these systems have substantial
15 minutes to power
guardrails
hour.
attached. We're not using generally black box 6 systems, especially in the public sphere. So these things aren't just going to run off and invest crazily in whatever they want. They're working within a specific investment ideology framework that we've established to keep them safe. So that's one. And then certainty is really going to come from performance. There's going to be a lot of talk over the next little while from everyone from people like us who use this in fund management to people who are using products for filtering and scanning potential opportunities, back testing your own self-derived strategies, or even I see coming up, potentially the reemergence of robo-advisors under the AI sphere. And to deal with the investor skepticism, we're going to have to prove it. I mean, if the ETFs, if the strategies are so good under the purview of AI, from end to end, they should perform well. They should outperform. So there's not going to be a lot of tolerance for explaining why that's a rocky road.
The proof is in the pudding, right? So I think when we talk about some of the drawbacks of AI, a lot of people immediately go to it's going to replace jobs, it's going to replace humans. Is that the case here? Is it going to, like, active fund managers, financial planners better be going to school to get educated in something else, or is it that they're going to be using AI to help manage their clients' accounts?
It's a great question. I think it's got sort of multi-part answers. AI will absolutely replace quantitative investing and quantitative trading. It's just a far superior technology. So anybody who's engaged in technical trading is going to use AI to do that trading, or be wiped out by AI systems doing that type of trading. It's very, very good at short-term pattern recognition. That's its strong suit. In terms of replacing FAs or active managers across the sphere, no, I don't think so, because there are things it does really
I don't think that's all that was in the docket.
It's terrible at context. It doesn't understand nuance. You've seen this.
There were some bits about
iterations of GPT,
shareholders not having any value.
You have AI echoing, and you've got answers that don't make sense. You have invalid information being disseminated. And so it's the same in the investment sphere. You're not going to have an AI system at this point in time.
Not in such specific words, but
manage a global
I think
macro fund.
implied.
It's not going to be able to intuit successfully.
How come there's no bankruptcy attorneys that are long on barbecue who understand the filings?
Change. That's best still left to humans with decades of experience in that area. So I think
it is all one big just bull trap or bear trap.
Well, versus let's
just
say
the wording is
advisor, a decent financial advisor,
hard even for the judge to
understands your comfort,
decipher,
understands your personal goals, understands your capital limitations, your age and stage,
what
etc.
did Zim start going?
You could fill out some questionnaires for a robo-advisor that would apply sort of loose AI best practices for the portfolio, but you're going to get a weighted basket of basically the same equities and index ETFs for everybody. And it's not going to be as finely tuned. So the short answer is yes. Like with all new technologies, some jobs will go.
Life relationships post? Which one?
Huge boon and a series
on the
of
most recent
tools that
filing?
professionals
I'd
can
be happy to
use
read it.
to enhance their offerings. And at the far end, no, there are lots of
These
jobs.
calls just pump up.
All right, certainly a lot to consider, and hopefully we can continue the conversation. Ryan Pennell, Kaiju Worldwide, thank you so much.
Thank you very much.
Yeah, I mean, it could be kind of a
Still ahead, we'll bring in our panel
template type wording on the filing. I haven't looked at this one. I know I've seen that on some where it's just been pretty standard talk, I guess. But yeah, I haven't seen it on this specific one. I get any bullish lords? Always has been. Here we go. You think Rally Vermont for that one? See if we break this little trend here. Mm-hmm. 5 minutes, the power hour.
And it's ultimately still got a fairly decent credit quality behind it. Not as strong as American Express, where that spend-centric model does kind of protect them from a lot of these credit considerations we've seen building. But the valuation is just a lot richer.
All right, Michael Miller of Morningstar and Dominic Gabriel of Oppenheimer and Company. Thank you both so much for joining us. That's going to do it for the watch list. I'm Caroline Woods. Thanks so much for watching. Stay tuned. Market on close.
financials. Even though regional banks are down 1% today, the financial sector remains the winner on the week. Here's your KRE ETF, the one I've been watching very closely. Going into this week, I talked about how important the 45 level on this fund.
Yeah, NEG's not doing too bad.
We broke it.
Nice little bounce today, 6%.
The fact that regional banks were able to firm up. Also exciting is the Huntington Bancshares CFO rejoining us.
See, kind of make a head and shoulders there on the hourly.
Talk about the latest from their report. As
But when we looked at the retracement, it's actually 61.8, so
was punished alongside many
maybe it's
others,
great.
but has its own very interesting story.
Just what we
as
want.
It's included in another bank business throughout a merger over the last 8 months. And so it's a good stock to keep an eye on. We're going to talk some details with the chief financial officer here towards the top of the show. If you broaden out from regionals and you look at the broader bank sector overall, don't forget, this is very important too. Even though JP Morgan, Goldman, and the giants with diversified business models are
I didn't buy any MBOT. I don't know.
still were punished.
I've looked at everything you've pumped. I don't think I've bought anything of it yet, though.
How important
Definitely not something I want to buy right now. Looks awful.
The action from this week going into next is actually very important to wrap your head around before we close out this week. The fact that financials are leading, you can see the relative strength of the bank ETF versus the semiconductors. That's the bottom panel. It's been flatlining now for several weeks. And obviously throughout the market rallying since October, the October low last year, banks have been trailing. We all know about the big tech leadership, but particularly that event in March still was such a huge pivot point of this year that we really have to appreciate and accept the gravity before going into next week's decision by the Fed. The regional bank scare totally caused investors to reprice their economic expectations. It went from sort of a ho-hum outlook on the economy to a suddenly very dire one, and that's allowed us to beat all those expectations since. Then as a result, Powell totally changed his entire framework and decided to pause instead of fighting inflation because he was so worried that there was going to be a systemic event in financials. And what we've learned this week is that the earnings season has actually put the banks in front after all of the excitement around tech. If banks can hold that throughout next week, that'd be quite a scene for the market. It's going to be tough with the big AI leaders starting to report, but it's going to be a very important chart. It's one we're going to talk about here throughout the day and later at the end of the show as well, as the risk radar might need a little update going into next week. All right, yields right now are down on the day, but that was also a bit of a story this week as jobless claims did come in lower than expected. We got a little bond sell-off that's brought us back up to about 3.8%. Something to watch as the dollar's also firmed up. My wild card that I'll be looking at over the weekend is going to be the crude oil market. Any indications of any commodity disruptions in the crude market or in the agricultural commodities market out of Ukraine and Russia is going to be important, because if there is a shock uplift in commodities, it certainly will not be favorable for the inflation outlook, which has been so instrumental in this market strength heading into next week's 25 basis point hike from the Federal Reserve. Also on that subject, we're going to talk a little bit about some of the protests and unions forming together, because that could ultimately drive some wage gains. Kevin Hanks and Renita Young here with me this afternoon. And I think a sleeper story going into this weekend, Renita, is that UPS is going to come back over the weekend with the Teamsters. And next week, we're going to be still hearing a lot about labor in America and the tension of the labor market in America.
Good to hear,
I
Dink.
think that's the overtone as well, because with all of these protests happening at the same time, it sends a message to companies who hire union labor. And so that message now UPS is hearing, because the Teamsters agreed to go back to the negotiating table with them on July 25th. What they want to do is have an agreement on a new contract before the current contract expires at the end of the month. But with the start date of negotiations, to restart I should say, at July 25th, that leaves them about a week to get business done. And the president of the Teamsters said that without an agreement by August 1st, he is going to call a strike. Now, Teamsters represents nearly 340,000 UPS workers, and this could be the largest strike since the steel workers strike back in 1959. And with that combination with Hollywood writers and Hollywood actors on strike, it could send an even larger message than we would have thought. But just to remind everybody of what this union wants is higher pay. They want wage parity across workers performing the same job, no matter how long they've been on the job.
Wow.
They want more full-time opportunities, and they also want UPS to remove surveillance cameras from the delivery trucks. But there's this growing, right.
Yeah, that's an interesting one in there.
It is, but I wonder how long they've been there, you know, and why and how they've become a problem. But there's a huge talk about what this could mean for the economy. You know, right now, UPS is pretty important. Pitney Bowes, that is a labor and it's a shipping and logistics software firm. That company said that a strike would lead to a breakdown in the supply chain nationally, and it would delay millions of Americans from receiving their packages. Can you imagine if you couldn't receive your Amazon?
Right.
Well, it would come from Amazon.
My cat wouldn't be eating.
The cat wouldn't be eating, honestly. And so they say that UPS handles nearly 25% of all parcels that exchange hands in the United States, and that's around 24 million packages a day. This company is huge. It's a $154 billion company, right? And it accounts for about 6% of the U.S. economy. And so some analysts say that this could have a ripple effect on not just supply chains, but inflation. And that is so bad that the United States Chamber is asking the White House to step in and make sure this deal is done by August 1st.
Wow. Yeah, I think it's a pretty big story combined with what's already been happening on the writers' side and the entertainment side to now have three major unions potentially if this is where it goes. I mean, it's certainly relevant to our inflation conversation, right, Kevin? Because part of the excitement around the recent data has been the strength of the economy, but the lack of a big shock upwards in wage inflation. I mean, if the folks get their way on the labor side, that's going to mean higher wages.
Yeah, I mean, remember, we have an administration relatively favorable in step with the labor unions. And so the labor unions, do you notice, you know, the news stories right now, a lot of labor negotiations going on in a lot of different areas.
Right.
So I think that will raise those overall wages across the country in different sectors of labor unions. You know, it seems like a lot of the news cycle is about discussions between labor unions and discussing higher wages. So yeah, you think that won't affect overall wages? Some of these unions are enormous. I mean, you look at UPS, the amount of people that are in that union is monstrous. So that has to have a lingering effect on wages. So I don't know if what the right level of wages is now. All I see are the trends are when we'd like wages to moderate and plateau, they're not, Oliver. They're negotiating a lot of higher wages in this country. Eventually, that'll probably show up in the data.
Yeah, a little bit of a wild card for that inflation trajectory.
Right, and so you mentioned a little bit of the competitors, or we talked about that a little bit when I said Amazon. It puts them in the spotlight because while it could be a good thing for them, they could be getting the business, it could also put them in the area for their folks who are part of labor unions wanting higher wages.
Absolutely.
And it just sends this overall message about how much more assertive labor unions have become in getting their workers the things that they desire.
Especially in the background where expectations for the economy are being lifted right now. There's a story out from Bloomberg today, the economists they track. I used to be one of the reporters that tracked that list of all the economists and stock market strategists, and all the targets, all the expectations are going up. Stock market strategists are pushing their expectations up. The GDP economists are pushing their expectations up, Kevin. So it's pretty unanimous that we're increasing, you know, at a better than expected pace for the economy, which certainly argues for maybe wage support.
Yeah, you know, if you look, some of the data that we're looking at for overall GDP has it creeping up from 1.2 to 1.5% in the second quarter. but only up from unchanged to 0.5% in the third quarter, and then down 0.4 in the fourth quarter.
Julie.
So a lot of economists still
NNDM.
calling for lower inflation,
yes,
PCE coming
NNDM.
down, overall GDP trailing off at the end of the year.
Flat today.
Oliver, we're
Yeah, I mean, I liked it on this break.
waiting
We're just
for
pretty far past the break.
restrictive levels of interest rates to start hitting the economy. It may not be
Like to see it pull
timely,
back and
but it also may
bounce.
be inevitable down the road.
But you might not get
that
that.
it does eventually get there. So, we wait.
Sometimes the market
this
is that
microwave
kind.
economy that we find
It pulls
ourselves
back and
in,
bounces on that
it
support.
may
Broke
not
out
come
of,
as fast as we want it, but that doesn't mean it's not
Might be a
coming,
nice
Oliver.
entry.
And this economy could, near
or
the
you
end
just
of the
wait for the
year,
break.
slow considerably.
All right. I appreciate
Which it looks like it was trying to do today.
Next week, good macro concepts to keep on our mind. Renee DeYoung.
And now it's getting
Kevin Hayes,
rejected,
thanks a lot,
so
guys. Alex Morris joins us.
these
from
longer
Infinite
wicks up
Investments,
top
where they've got a lot
might
of
be a
bond
sign
funds
that is going to
and
come down and
course
retest.
in focus over the last year and a half.
Either this
Alex is the
diagonal
President, Chief
trend
Investment Officer. So, economists are looking at
or
expectations for the economy. Alex,
just under
stock
$3,
market
kind of
strategists are
resistance
playing
back here.
catch up to the run that's already happened. There's a lot of
Gotta
optimism.
have some kind of formation. Just doesn't have anything but up right now.
Sell-side community. But is there potential for some of these problems to reheat? If the economy's so good, what's to stop inflation from heating back up?
It seems that way, John. I mean,
I think the short
I
answer
don't think
is
there
interest
was
rates.
really ever an
That's
in-between.
well aware, right? We're going to see another hike. They've made very clear
You're,
they're willing to hike
you're
again
putting
this
all
year,
your
and they're willing to stay at high rates.
Yeah.
And long term, certainly they've had an effect on the market. As Kevin pointing out, we may not have seen all of that priced in yet, and it will eventually happen. But certainly their results have spoken for themselves. They have been able to cool the top line of inflation. And if we look at some of the other economic data that hasn't been as strong as it had been historically, we certainly start to see this starting to take effect.
The lagged effects concept we hear so much about, I'm starting to wonder if it's a little overstated, Alex. I mean, last year the market traded inversely to rates, basically. It seemed like the effects were very pronounced in stocks. We had a big scare in regional banks that were stressed, partly because of interest rates. And now if we're turning the corner, what happens if the lagged effects already happened?
Well, it's a good question, and it's one that I think a lot of economists haven't looked at. But I guess this is the real question is the resiliency in the economy a feature or a bug? And this is what resilience looks like. We've been able to basically adopt the motto, keep on trucking for the foreseeable future. And if this is the way the economy is going to look, interest rates that are higher but probably still come down, we're not looking that different from how we used to look, 20, 30 years ago. We've gotten very used to interest rates at zero, and numbers north of 100 or 150 basis points seem to be frightening folks, but that's an anomaly in the long-term scheme of things. Interest rates, say take the 10-year, even at 400 basis points, are not a ridiculous thing to think about. And the ability of companies to innovate, to find new technologies, and to put products out that are interesting to consumers is basically par for the course. So we start to worry less about the short end, in 25 probably. We'll start to see that the economy is actually pretty good at powering through, even if it doesn't need to live off of free money.
I like the way you put that, because I do think that's ultimately what has surprised a lot of folks here, is just that without the Fed's support, things are much more intact than certainly the doomsayers said they would, but even just kind of the more garden variety historical yield curve implication bears.
Yeah, I don't know, John. I sold out today. I don't know.
Funds, I imagine you see quite a bit of
I might just
flows
buy on a dip on some bad news next time.
Compared to a year ago, right?
Or the TA could turn around.
Yeah, so when we started this, the single treasury ETFs, the US benchmark series, we were spread evenly across the curve. So T-bill in the 90-day, short end, U2, and sort of that pivot point in U10 at the far end for more duration lovers. We've now filled in all the parts of the curve. Certainly the primary action remains on the short end. Folks harvesting yield, and at T-bill and X-bill north of 5% annualized dividend yield. It's hard to argue, particularly if you don't have a strong view where else you want to be. But certainly have seen
What does
much
Mullen
more
do?
activity.
BBIG is pushing for the highs.
Other trades and going
Mullen's
to
down
longer
7.5
duration
today.
treasuries, but still seeing a material yield. I mean, 5 years ago, 4% on anything in the treasury curve was, a pipe dream. But now to
Always
a
re-enter.
little less than that.
I've been trading it. That's the way it works.
That has and its potential for price appreciation if rates do come down. is really attractive, and we've seen a lot of folks pile into that trade. And
There's been times where I've been hesitant to get back in. TAs look good, but I haven't wanted to get back in just because of the fundamentals. Like,
and clip that 5% on the short end.
the lack of fundamentals.
Nitpicky question, but to your point there about
other than that, I pretty much just traded it based on the TA. BBIG might be about to break out. I don't like Mullen, dude.
Compared to a year ago, you're locking in yield, and if rates come down, you get some capital appreciation. But I wonder if we kind of split those in half, which is the main draw right now?
Just by pure asset level, it's the short end of the curve. I think folks.
You know what it is, Lords? I sell during the day,
it's a pretty attractive
and then I watch PP at night, and I buy in the morning.
Great place to collect some income.
I just have to go get a bunch of opium.
But I think
Misplaced
if you ask me to guess where
DD.
we're going to see some real action, you're going to see percentage-wise much larger increase.
Get me to buy back in.
Assets as folks want that price movement, and particularly an ETF to be able to get that in a tax-advantaged manner will be very attractive at the back end of the year.
Okay.
Second
Alex, like the update on where you see the money going. Help.
Barbecue to the moon by night. New high on BBIG there. Not BBYQ.
Absolutely, Alex Morris,
BBIG.
All right, lock in the short.
You guys are the same too. You come here, you listen to my stream. I get you back down to earth and center you, and you realize, wow, this is a stupid play. And then some of you sell, some of you think about selling. I'm like 6, 7 o'clock. You're on the PP show just during the intro, and you're just like wanting to buy more, buy it back. Yeah, let's get more.
Now, post merger and trending.
By the end of that show, you're pissed you can't buy in extended hours.
Joining us next.
There's some volume on that breakout too on BBIG. That's nice.
Many option traders tend to focus on price.
Buy on TA, hold on hopium. If you're gonna buy on TA, you have to sell on TA. He's got a little bounce there. Really directionless today. Still have the rebalancing though. If you get some fun stuff in today, don't think it'll have any effect on OTC stocks. GME might get a little funky. Tesla might do something weird. There you go, BBIG. Thought I didn't sell calls yet. Calls actually aren't really moving a whole lot. You're pretty good in the barbecue range. Yeah, I mean, honestly, TA on it's pretty good, other than the huge drops from court hearings. If you can just void out those, it's pretty clean to trade. But you've just been buying one share at a time here and there. I guess it's a lot easier if you're just buying one share.
Day after the report, let's talk with the CFO, Zach Wasserman, back with us from Huntington Bank. Zach, thanks for rejoining us on the show.
Great to be with you again, Oliver.
When we spoke last quarter, you were telling us about your guys' insight into the events of earlier in the spring and the regional bank stresses that happened.
Multiple quarters now in a row of growing deposits.
Watch reaction down a ago. Reaction to what? Restructuring plan that we heard in the court? I wasn't even sure we'd hear about it this soon. And I still don't even know if that's what that was.
$2.7 billion ending total deposits, which was up from the. I mean, that's the increase. Seems like a big amount.
It was really encouraging. Again, it's been a continuation of a multiple trend quarter of growing deposits for Huntington. And, pulling back from our company and specifically, I would say it's been an encouraging quarter for the entire regional bank sector.
Oh, the price target?
I've been
24
looking at the
cents?
data for the top 10 large
Nice.
regionals that I track carefully, and all but 2 of them grew deposits during the quarter, and I think it's an encouraging sign for the industry more broadly.
Can you tell us the difference between how you measure the average total deposits versus the ending total deposits? That's just how someone's account will vary within the period. You take that kind of snapshot versus what's totally in there at the end, right?
Correct. The average is sort of on a daily basis throughout the entire quarter versus the ending. We know that the early part of the quarter was challenging for the industry broadly. It was just a couple weeks after the Silicon Valley bank failure and a couple of the others that we know well. But throughout the quarter, I think we saw the environment improve considerably. For us at Huntington, we saw deposits grow sequentially April to May to June, and even the end of June was higher than the average of June. So it really was a pretty encouraging environment for us in particular, but again, I think for the entire industry.
The provision for credit losses around $92 million. What do you see as the macro outlook on the risks to credit right now? Is that a number that incorporates high risk, low risk? Give us an idea.
Yeah, what's interesting, I think, is the results we've seen. Actually, we saw credit losses in the quarter reduce quarter to quarter, is very much indicative of what your past discussion was just a minute ago in terms of the strength of the economy. We continue to see underlying.
CJ, thanks for the support, buddy.
Here and
have a good weekend to you as well, sir.
More broadly, and certainly the generally more robust economic environment that we see today versus what might have been expected, let's say, a year ago, is contributing to a fairly benign credit environment as we stand today.
Do you think it is tied to rates? To what extent is it the fact that the bond market's calmed down, the Fed's not as aggressive, or is there some other impulse to the economy that is keeping it healthy?
Well, I think, clearly the interest rate environment has increased significantly, and so one would have thought that there might be more pressure on the economic environment given what has happened with interest rates. But I think, what we're seeing is the strength of the labor market. You have not seen unemployment.
Little RSI divergence here on the 5-minute. I'm trying to sell some calls.
Underpinning of what we see right now. There's also quite a bit of infrastructure spending going on throughout the country, certainly in our Midwest.
If we get any
we're benefiting from that
rebalancing action.
And, I think the general posture of companies, notwithstanding some caution, is to still see revenue in front of them, still be investing at the margin, still be hiring. And so, all of those things together mean that, generally speaking, we're seeing a stronger economic environment than we would have maybe expected at this time.
Does that change what type of loans you're open to, what type of lending standards you might accept?
Our philosophy at Huntington is to underwrite through an entire cycle and really not change our underwriting standards for any given period of time. With that being said, we are seeing good pockets of growth, and for us, we've got a very strong equipment and asset finance business, for example, which stands to benefit from all of the investments that are being made right now in corporate America to create automation, to drive technology and energy efficiency. We've got a very strong business banking division that is originating lots of small business loans, and even the residential sector. We're seeing a continued growth in residential mortgage and associated products. So it's fairly broad based, and again, still fairly solid pockets of growth.
Zach, thinking about the commercial real estate risk that a lot of folks were mulling over alongside the regional bank sell-off, how does that play into your loan book, and are you open to taking on that type of business right now? It sounds like that's not really the main focus. The focus seems a little bit more like kind of cyclical, hard asset type of entities.
Correct. For us at Huntington, commercial real estate represents about 11% of our overall loans, which is relatively lower than most regional banks and certainly a lot lower than most smaller sized community banks. So it's an important portfolio, but not one that's significantly sized. I think for us now, being very judicious about where we deploy additional capital into the commercial real estate space, knowing that it's one of the sectors that is the most keyed to the level of interest rates, and hence, those
shorts and
developers
BBBYQ
themselves
calls.
and just, the broader commercial real estate market is going slower in terms
The 3.5s for next Friday.
of assets.
Okay.
I could.
So for the
I might
thoughts here
end up buying
on
back
the
on
broader
Monday.
economy, the specifics
Hopefully for
on
a gain.
business. Appreciate the update, Zach.
Spreads are kind of
Great to be with
funky.
you again.
Zach Wasserman, CFO at Huntington
Or I could
Bank.
just
HBA
keep rolling, I guess,
is the
if it's
ticker, down about
in the money.
0.5% today after about a 5% rally this week, and more over the last 10 days. Sounds like somewhat smooth
We wouldn't take the
sailing.
200.
When we come back, very interesting options corner with Mr. Kevin Green joining us. Some interesting picks and a lot of different trading styles here. Definitely some overlooked stocks. We're going to blend the overlooked into the options trades. Be right back.
$160,000, and the max loss is theoretically unlimited because they are short those calls. But I also looked out at the June 2025 options, and the at-the-monies are actually going for about $6. So the market itself is not really even pricing in that this stock could actually reach above around that $60 level, which I found very interesting. Usually you don't see that unless there is maybe a corporate action that might be coming up or something of that nature. Usually the IV starts to ramp up as you get farther and farther out, or in the premiums, because there's more time, and that's really not the case even if you go from 2024 to 2025.
Okay. All right, so someone's betting the Comcast kind of gets stuck here, and I don't even know what to think anymore. The stock trading back at 52-week highs is maybe one of the more surprising kind of, I mean, I don't know, it's still well below where it was during COVID, but it has been pretty strong without a whole lot of positive news flow behind it. But okay, nice one. Interesting trade, betting that it gets stuck here. Last one you got, GSK, which is the outright bearish trade in our session here. GlaxoSmithKline back into the pharma healthcare category.
Yeah, definitely. Now, once again, this is a stock that doesn't trade a lot of options, but when you do see some options activity there, you want to be able to bring it up. And this trader is actually buying 3,000 contracts of the August monthly $33 puts for 21 cents. So that's a bearish trade. We do know that GSK actually does report earnings on August 2nd. So it does appear that they are trying to make an earnings play here. The max loss for this trade is $63,000. Max gain is $98,370. Obviously, that's theoretically if the stock does go to zero. And the break even's at $32.79. So this is, once again, kind of an interesting type of play because GSK has had some issues when it comes to some of the patent rights and some of their patents starting to fall off and having generics really challenge their business. And so if we are going to hear some of that same type of commentary from their earnings announcement, maybe this trader's trying to bet on a movement to the downside here. And they could potentially, as with any options trade, take it off before the expiration, as the implied volatility will most likely start to go down after the event risk is over.
Okay. All right. So buying puts and seeing if this thing falls off around earnings coming up over about a month or so. Rough chart, but it's not bad. It's not bad. It's just not quite as glorious as some of the other pharma comeback stories. Thanks, Kevin Green. Nice finds here. A very good overlooked options combo there from KG. Appreciate it on a Friday. Coming up, Jenny's got an update on Disney. ESPN continues to be a bit of a troubled child, but potential still to find a strategic partner.
Watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watchlist, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your
What are you going on about, Lords? Pirate flags? Happy Mountain? Alright, 20 minutes. Still time for rebalancing action. I don't know if you guys were around GME when it did that end of day. I might have been streaming that day actually, which was pretty unusual. I streamed it like maybe once a month for a special occasion on earnings and then other special occasions. And someone was in the stream. And they were like, "Are you ready?" And they totally called it. They said in the last 10 minutes it's gonna rip, and it did just that. I don't remember who it was. That was crazy. GME's down almost 3%. BBBYQ's held up quite well. Very well. Hasn't even made a move back to VWAP. Sad Lords, expecting something big today. 15 minutes. Still be upon us.
To continue to work on that edge because ESPN has just been burning money for Disney.
Yeah, and I don't think a lot of people realize that either, given the popularity of it and how important it is to some people. So they got to figure out how to fix it, like everything else. Even their, star child is a bit of a problem.
Because YouTube TV is the best way to watch sports, I think. So that's also a competitor that we don't talk about enough.
I've heard this from producer Rob Wyatrowski himself, my sports mentor. So I guess hearing it from you too, we got to follow along at YouTube TV. No advertising here, though. Okay.
Rob is also my sports mentor, I think.
Yeah, he serves that purpose for many. I'm getting golf updates from him right now, actually. We got to go. Thanks, Jenny. All right. Let's do some trading with Phil Strebel, joining us from Blue Line Futures. He's the chief market strategist. Phil, this week it ends a little bit quiet, but it wasn't short of some fireworks. So some of the big tech names and winners slipping, bonds a little active. What's the top story for you going into next week?
Oh, it's going to be, we have a whole ton of economic data coming out next week. I mean, there's going to be a lot of volatility. You've got, I was writing an article this morning. I said, you better buy a five-star harness if you're going to trade in the next week with, you got the flash PMIs, you've got consumer confidence, you got the Federal Reserve probably going to raise rates again. You got ECB, Bank of Japan, initial claims. So it's just a ton of data that's going to move around all these risk assets.
Hey, for all the movement potential, one is stuck in the category of risk assets. Bitcoin at 30,000. Is this like the quicksand area on the chart or what?
All right, so you remember when I said it was going to zero? Obviously, that didn't happen, and since
Well,
then
you got
it's
to
up
give that
about
time. A target like that, Phil, doesn't happen overnight.
So it's up 80%.
But yeah, I remember. That's why you're back on the show. I love you, Phil.
So up 80% year to date. Ether's up 50%. You know, I saw a news article. Dogecoin leads the way, and the bartenders, they're back talking about it. When you hit the bar after work, they're going to be talking about it.
All
So
right,
you
I'll go to a different bar. They're talking Doge. I'm out of there.
You got variables out there. You got the SEC versus Ripple. You got, you know, what's the regulatory framework? What happens once all the Bitcoin is mined? And what is the ETF demand once, you know, the spot Bitcoin ETF's approved? So I think we came up to a natural level here. It's kind of do or die. It's either going to break out to the upside or sell back off. You know, me personally, I've never really been that much of a fan. I say you own it. If the dollar demise is accurate, like a lot of people are talking, a lot of those, you know, like, you know, off the beaten path newsletters, you know, and if there's global war. So what I don't like is yesterday you saw U.S. equities, big risk off move. What did Bitcoin do? It moved $1,000. I don't want to see that kind of volatility. And, you know, you got RFK, he's talking about backing the U.S. dollar with Bitcoin. And then one more thing.
What does that even mean?
I liked your chat GPT hat that you had on. So I went on there and I asked what Bitcoin and Ether will be in 5 years. And it told me Ether, $12,539. And it told me Bitcoin would be $95,522.
That's Chat GPT's call?
That's what it gave me.
Oh, wow. So that's like the anti-Streeble. That's like the inverse Streeble call there for the price action. Do you think that the potential for a spot ETF is that big of a deal, or is that just going to be a way for early holders just dump it on more people?
Yeah, I think so. I don't think that it's going to have that much of a demand. I think that there's just too many avenues for people to get exposure to that market. There's too many, you know, other cryptocurrencies out there and everything. It's already been saturated. I actually think that this is really late to the game.
So the idea is that it's going to, you know, the coiners say it's going to usher in a new type of buyer, but I guess you would argue then it sounds like if you really want to buy crypto, you can do it in a ton of different ways by this point. It's not like it was 5 years ago. You don't have to log on to some weird site. I mean, I can buy futures right now.
Yeah, I just think that really, like, if you're going to own Bitcoin, you got to take it off of any kind of network. You got to have it in cold storage. That way you have it. Because other than that, really, you know, you open up an account somewhere, you buy Bitcoin, you're just a claim against, you know, what the holdings are. You're just like when you give your money to the bank, you hope that they got it in the vault when you want it.
True. What else stands out to you as a macro trade? Anything ahead of next week, Fed?
One thing I'm watching right now is the Dow on today for the last 15 out of 22 years has been down on the day. So I want to see if it closes in the red. So that's where, like, I'm really watching at the moment out of the corner of my eye. But it is the Fed next week. What kind of tone is there? Are they one and done, you know, going forward? So that's really the big standout. We trade a lot of precious metals at Blue Line. So the initial claims number has been like kind of a gut punch when it comes out, because you don't know if it comes out a lot softer.
You didn't win.
The labor market puts pressure on, you know, the gold market.
You haven't even challenged me.
Going to keep raising rates. So that's something that we've been concerned about, you know, as far as a number that's been difficult to predict recently.
Like you mentioned, a gold there. Last thing, if you'll indulge me, is gold stable on the week despite that drop after jobless claims. Didn't drop too far. Is that impressive, or is it, what does it tell you?
So if you look in like 2018, when the Federal Reserve, they were still quite hawkish. They said that they were going to raise rates 3 more times. They ended up not raising rates at all. GDP slipped, the business cycle peaked, and they started to cut rates. I think that if you look at some of the models that like hedge funds and independent research companies are putting out, they do expect that GDP will slip down going into 2024, the first quarter. And that's when I think that the Federal Reserve is back on their heels. They might have to cut rates after that. And I think that's a springboard to take the gold market up to 2,500.
All right, a lot of levels, a lot of specifics, and you are right now 5 basis points away from a drop in the Dow. Thanks, Phil. Good combo. Always a fun one on a Friday. I appreciate it. Phil Striebel, Blue Line Futures. Let's talk some more about next week with our Schwab team. A couple great guests joining us next. Cooper Howard and Nate Peterson will take us to the bell.
It's me and you and Barbecue FOMO again. Should have been trading the yen today. I think it had quite the drop. Barbecue's coming down to VWAP. Finally made it down to VWAP. Well, up pretty good all day though. There's 10 minutes Fugazi. Oh, crazy rebalancing moves. Could be the last 5 minutes. Underdome. Tiny gap at 2250. Oh, this one at 20 also, and 19. Being that this OTC and barcodes, and these aren't real actually, these are intraday. That one actually might not be. No, yeah, that's intraday. So is that one, those don't count. Crazy day that was, huh? In the world. Oh, it just ripped into close. I can't remember that. Yeah, I'm not seeing any gaps. Tiny one there. Doesn't count, too small. In the margin of error. This is off OTC. Yeah. I don't see it. To hit the teens before it fills, like the cent teens, like 17 cents. Look at BBIG. Wow, dude, this close is way strong. Too strong.
But then there's also this kind of percolating narrative around labor unions, from entertainment to industrials. Is that kind of have the potential to filter into some wage or inflationary pressure if employment remains strong?
You know, I think you have to look at it not just one-offs of kind of unions or labor unions or things like that. I think you have to look at the whole employment picture. And what we've seen is kind of taking all the data in totality is that it's a tight labor market. The Fed's obviously focused on their two mandates, inflation and labor market. And they know that they're very laser focused on what's going on with inflation right now. So I think there's the potential for some inflationary risks to bubble up if we continue to see a very tight labor market. The Fed doesn't want to see that. So I think that looking forward, what's going to be important to watch next week for the markets is what comes out of the Fed on Wednesday. Again, expectations are pretty baked in that we're going to get 25 basis points hike. But what comes after that? That's the big question. Do they pause? Do they leave the door open for a potential rate hike? I think they'll leave the door open to another potential rate hike, Oliver. This Fed has done a number or done a kind of, if you look back at what they've done in the past, they like to keep their options open. So I think that's kind of what I'll be looking forward to. The tone of the press conference is also going to be very notable. We don't get the dots or the SEP. So we're really just running off the statement that I think the statement's probably going to be relatively unchanged. And then where we'll get most of our information is from the press conference.
Hey, how come no dots? I want my dots.
You know, we got to wait until the September one for those.
Oh, man, no dots. What are we supposed to connect? Nate, so when we get the Fed on the same timeline as some of these recent AI leaders for the market, what do you think mostly drives the action next week?
I think it's those two things. And, you know, the Fed potentially could say something that is a little bit more hawkish than people expect. But then when you look at last week's, inflation data, that looked pretty encouraging. We are going to get PCE next Friday. That's after the Fed. But those mega cap techs are going to be really important. We know how much they can move these markets around, the market cap weighted indices, as you know. And I'm surprised that the market's done or held
Delusion
up
of
so
RC.
well
Yep,
this
RC
week
sold.
as it has, given,
Committed
this
filings.
pretty big drawdown we had.
Public knowledge.
Names. Microsoft is down $20 in 3 days.
BBIG about to hit a new high. Wow. Into close.
We've seen, some of that
He's gonna
rotation.
squeeze
I
next
think that's what's
week.
held the market up is rotation into healthcare, financial
I'll buy these
staples,
calls back
utilities,
Monday
and the
morning.
like. But I think for next week, you've just got to still be probably
Dude, yeah, look
a
at
little
that
bit
close
mindful
on a
that
Friday too.
we could sell on
No
the
profit
news. We
taking,
look
just
at stuff
buying.
like AutoNation today. I mean, the stock's down 12%. Numbers look great to me. What gives? Well, in the past 7 weeks, the stock is up 40%. Tesla, heading into its report, was up 90% since the beginning of May. Netflix was up 50% since the beginning of May, heading into that report. Microsoft did
Yeah,
hit
not
an
seeing any weird
all-time high
rebalancing
earlier this
stuff. New
week.
high of the day on
Now that
BBIG.
they're
Look at
taking
you.
them down some,
GME's down 3%.
might make the setup
BBBYQ getting a little bounce there. Didn't quite make it to VWAPs. Down 10.5.
But, I just think you still have to be
BBIG 27% up and rallying.
how much is priced in. For those viewers, if you're concerned,
That is the danger with RSI divergence. If the price action is still bullish, might not be a good indicator. Look at this, bounced right on that trend line perfectly.
These companies certainly had a
What happens when you try and front run it? Try and time the top before confirmation.
to the AI stuff.
Here's what RSI divergence does. It works pretty good on the longer time frame, especially hours, days. And it did work here. I mean, it sold off from there. It just still bullish. $3.04.
Others like Microsoft, I mean, it's got to be pretty high, I would think.
I'd agree. Microsoft, I'd probably put it number 2 in terms of the AI play out there. Yeah, it's got to be next to NVIDIA.
That was this week too.
What kind of gamma ramp we got going on here?
Idea of a product, an AI product.
Right. And you know what, though? They actually could deliver in terms of the guidance and what they have to say. I mean, rolling that out on the enterprise level, given the market dominance that they have, and if those corporations are willing to pay whatever the
It only goes up to 5.5.
I think I heard something like quote of
Might get the whole chain the money
user.
next week.
I mean, this could turn out to be something big for Microsoft. I, of course, don't know what they're going to report next week or what they're going to
Jeez,
guide.
34.10, 28%.
Microsoft is one of those companies you could see them basically deliver.
2 minutes.
But again, they hit an all-time high on
5 minute,
Monday.
5-finger slap is here.
Everything's about
Barbecue's
price and
pumping a little bit with some volume.
You don't want to buy anything at any price, it's always at the right price, at the right
Yeah, you've
valuation.
got volume in the last
What's been coming
20
into
minutes on
focus
barbecue.
so far in this Q2 earnings season.
Right place, right price, right time. Thank you for the help, guys. Cooper Howard and Nate Pearson. Nice way to close out the session here.
You guys are ready to get fired on a Friday?
Busy week. We'll talk some more about what worked and what didn't when we come
That's
back
the time to
with
do
the
it.
closers panel and an even division across the 4 indexes today.
Oh, I maybe just saved you your job. And back down. BBIG, look at that volume into close. You don't have shares. Trace. Spoke a little too soon. Unless you're talking about BBIG, which I don't think so. Dump to VWAP into close, unfortunately. There it is. There's the week. July 21st is a wrap. OPEX. ETF rebalancing. July OPEX is done. Thank you guys for the support. Sorry I've been a bit absent as of late. We'll see how next week goes. Let's see. I mean, this is my winner today. BBIG 25%. Just nice escalator, like easy to hold that thing. Beautiful chart. How bullish it was into the close. I think this thing might be crazy next week. Last week, starting to top out a bit. Some consolidation here. Pretty undecided. Who's in control, I think, at this point. We kind of have indicators for both ways. I don't think it's low enough to where you couldn't say bulls couldn't pick this back up. But it's not high enough either to say that the bears don't have it. So, waiting on Powell next week. That's what the market does. It puts it right in the middle. You're coming up to a catalyst. So we do have Powell next week. 25% on BBIG. Of course, barbecue did some stuff this week. Had nice looking TA going on. Nice patterns. Let's see. Yeah, we started the second run up on this cup. Hitting the high and then the false breakout. Glad I closed up there. That was tough because it was a breakout. It was just weak. It was low volume. Then it started to break down, and I'm like, uh-oh. Made that head and shoulders. Saw that coming. Thought might be a little more down for the handle. And then of course that docket and big sell-off this morning. So we'll see. It's still fighting. Look at that resistance. It's still right on that resistance line. Isn't that crazy? I drew that this morning. Well, not this morning, but yeah, see what kind of trajectory it holds coming down. If it stays this steep, come up and kind of start messing with this one again. I think it still could be in a handle type formation. Yeah. Don't start doing that. Yeah, this could still be a cup and a handle going on. So today's bounce was pretty bullish. I don't think anything changed as far as crazy people thinking that someone's going to take over barbecue and they're going to make lots of money. I don't think the filing said that that's not possible anymore, but I don't think it was necessarily good news. But I don't really know. I look into it. Still have a lot of those options out. It's unfortunate. Hopefully we get some continuation next week. Otherwise I need to be closing some. Today I closed out of my short call and run. So I legged into a run, made a poor man's cover call. Closed out of that. Closed out of my FBD shares. Thanks, Zip. I bought Zim calls, which was kind of a mistake. I mean, I like the chart, but I don't want to put more capital out. Anyways, got Zim calls today, August 18th, 17.5 strike. Still have snap calls, which I'll need to sell on Monday. Rad calls, neg calls. Yeah, snap. Negs looking pretty good actually. Right in that golden pocket on the retrace. So, hope you guys had a good week. Thank you for the support. Molava, thank you for the donation this morning. Very appreciated. Very generous. I was a bit absent. Thanks, Lords. Fun banter. Almond barbecue, sweet dip. Have all summer. I don't know. Might be a year on OTC. Kai says. Thanks, Christopher. Thanks, Mo. Thanks, Lords. Thanks, Guts. My pleasure. Kicking chills out. There were no chills in here. All in your head. You have a nice weekend. Also, Trays. Thanks, Hugh. Have a good weekend, man. All right, guys. We'll see you on Discord. I think it's pinned. Been 84 years, indeed. I think it's pinned in chat. If you're not on there, jump on there. Not spammy. Just a nice place to converse and ask questions and learn and voice chat. Thanks so much, guys. Appreciate it. We'll see you on Discord. See you on Twitter. Sup up, like up, comment down. Happy money sticks around. Okay, peace out.